Okay. We have much to cover today, so we don't waste much time. I believe by now everybody should be on top of issues. By now everybody should be on top of issues. Our
One
first,
week more?
yes, 1 week more. Mm. I think next week Monday, right?
Yeah,
Okay, all right. And principles of taxation is on Wednesday. Is it Wednesday?
yeah, Wednesday.
In the morning or afternoon?
Money.
Okay,
It's a money paper.
all right. So we have 1 week more and we'll be fine. We'll be fine. We'll be fine. By now, I believe we are all on top of issues. Our first meeting, we've gone through the exam structure, the format of the questions, and we've gone through every single thing. So today, we will just solve questions. We just solve questions. But I think we are done with two studying ways. We are done with fiscal policy and tax administration. And we are equally done with VAT, value added tax. VAT is 15 marks. VAT is 15 marks. So you have to do your possible best to get your pass mark at least 10 marks, at most 13, or you get all the 15. The only problem with VAT is the theory are many. The theory are many. If they bring calculation, Charlie, you have nothing to worry about. But the theory too, they are not things that you cannot write anything about. Definitely will be fine. So we have about, I think, 4 or 5 more weighings to go. We have income tax liabilities for individuals and partners in partnership. This is for 15 marks. Income tax liabilities for individuals and partners is for 15 marks. Then we will do corporate income tax. Corporate income tax is also for 15 marks. So my prayer is today at least cover like 50 marks. If not 50 marks, at least 40 marks there, we should cover it today. Then corporate income tax is also 15 marks. And for principles of taxation, you shouldn't be expecting any huge question, any complicated questions, any questions that the things will be meaning. No, don't be expecting questions like that. Corporate income tax is also 15 marks. Mhm. Just know the basic things in each of the principles. So when we come under corporate income tax, there are certain things, there are certain principles that you have to know how they are treated. Very, very important. When we come down, we will discuss that. But we are doing income tax liabilities for individuals and partners for 15 marks. And for personal income tax, there are certain things you have to know. There are certain computations you have to know. First of all, you have to know how to compute the consolidated basic salary. No examiner will give you the basic salary of the employee straightforward. Now, if the examiner want to favor you, fine. But in most cases, the examiner will give you the salary structure, the scale that you have to compute the consolidated basic salary. So you do that from the date of employment of the employee, from the date of employment. So you have to look at from the date of the employment up to the time you are doing the assessment. Can my voice be heard? Can you guys hear me? Mr. Philip, can you hear me?
I can see, sir.
Okay, all right. So you do that from the date the person was employed up to the time up to the year of assessment. So you have to take note of that. And I believe right now everybody know how to do that. All right. Then there are certain things you have to know. When you get your consolidated basic salary, there are certain things you have to know. The allowances, the cash allowances, the cash allowances. So you have to know all the cash allowances. Now, entertainment allowance. Take note, if entertainment allowance is accountable, if the entertainment allowance is accountable, you don't include it as part of the allowances to the employee. But if the entertainment allowance is unaccountable, include it. So take note of those ways. Then you go to the benefit in kind. You know the benefit in kind. So you have to know the rate. No examiner will give you the rate. You have to know the rate. So if the employee is giving car, driver, and fuel, you have to know the rate. The rate is what? Car, driver, and fuel, the rate is what? 12.5% of the total cash emolument. Up to a maximum of what?
I think 1,000.
Up to 12.5, up to a maximum of what?
Is it 1,250 or 1,005?
I don't know. I believe it's more than that. This is annual. This is annual. So I believe it's more than. Who is helping us? Up to a maximum of what?
1,500
1,500 a
per annum.
year. 1,500 a year.
Per annum, yes.
All right. Okay.
Per month.
So
No,
driver,
it's
car, and fuel. 12.5 up to a maximum of 1,500 per month. It's per month. So per annum it will be how much?
18,000.
Per annum it will be 18,000. That's the
18,
18,000. Yeah, that's what I'm looking for. 18,000. So vehicle owning is 10% up
up
to a
to
maximum of
1,250.
a month. So per annum, just multiply by 12. So know the rate. That vehicle with fuel, vehicle owning 5%, fuel owning 5 cents, up to a maximum of 625 per month. Accommodation with furnishing, 10% of total cash emolument. This one, there's no limit. Accommodation only 7.5, furnishing only 2.5, shared accommodation 2.5. You have to know the rate, very, very important. Now, while you get all your benefits in kind, you add it, and the benefits in kinds are computed on the total cash emolument. So if your total cash emolument is wrong, know that your benefit in kind will also be wrong. Okay. Now, after you have gotten your total, your accessible income, there are other things that can be included in determining the total accessible income of the employee. So there are other things you have to know. The one is loan benefit. Loan benefit. So you have to know how the loan benefit is computed. When the employer gives loan to the employee, the loan must be on the current market terms. The interest rate must be the prevailing BOG interest rate. So in case the employer, the loan, the terms of the loan, the interest rate is not the arm's length rate, then the employee will be enjoying some form of benefit. So it means that the employee will be paying lesser interest than someone who will go to the financial institutions and take loan. So that benefit must be added to the employee's income and tax. That benefit must be added. Now, how do you compute the loan benefit? It's very simple. The formula is A minus B all over 4. So it means that the loan benefit is computed on quarterly basis. On quarterly basis. So whatever you get, just divide it by 4. Now, so the A is the interest payable using the BOG rate. So in the question, they will give you the BOG rate. I'm saying these things because examiner can just pick something, question on loan benefit and give you to compute. So you have to know how to do that. The A is the interest payable or the interest payable using the BOG rate. So the B is the interest paid using the rate of interest given by the employer to the employee. Then you divide it by 4. So you find the difference and divide it by 4. Now, there are some conditions whereby the quantification of the loan benefit will be 0. So first of all, the loan must be from the employer to the employee. Then the duration of the loan, if the duration does not exceed 12 months, so the terms of the loan does not exceed one year, and the sum of the loan plus any outstanding loan balance within the previous 12 months does not exceed 3 months basic salary of the employee. So these are the conditions used to check whether the loan benefit should be quantified. These are the conditions you have to check. So in other way, if the loan terms exceed 12-month period and the loan amount plus any other outstanding loan of that particular employee for the previous 12 months exceed the 3-month basic salary of the employee, then you have to quantify the benefit and subject it to tax. You have to quantify the benefit and add it to the employee's income for tax. So this is how you do the quantification. A minus B all over C. A is the interest payable using the BOG rate. B is the interest paid using the rate of interest given by the employer, all divided by 4. Now, you have to note that loan benefit is computed on monthly basis. So whatever value you have gotten divided by 4, then you divide it by the number of months. That means the terms of the loan. So if the terms of the loan is 24 months, it means that after dividing the A minus B over 4, whatever you have gotten is for the whole 24 months. So to get the monthly basis, just divide the whole value by 24. Then if we are doing the assessment for the end of the year, at the end of the year, so just multiply the monthly balance by 12, then to give you the loan benefit for the year, Or in simple terms, whatever value you have gotten after you do A minus B over 4, just divide it by 2. That will give you the yearly loan benefit. But the principle states that the loan benefit is computed on monthly basis. Now, the next thing you have to know is how overtime is taxed. How we tax overtime. Overtime given to employees. How is it taxed? You have to know that. Very, very important. Now, overtime. The principle is that if the overtime payment to the employee, first of all, the employee must be a qualifying junior employee. So it means that employees who is a junior employee and is it the monthly basic salary or the annual? The annual basic salary of the employee does not exceed 18,000 Ghana cedis. Is it 18,000? You guys have known the thing, so let's talk together. Is it 18,000?
Yes.
Yes. So the annual basic salary of the employee does not exceed 18,000. So it means that monthly it will be 1,500. So if the employee does not earn 1,500 monthly, that employee will be a qualifying junior employee. That employee will be a qualifying junior employee. So you test those things first before you know how you tax the overtime, So if the employee is a senior employee, it means that the total amount of the overtime will be what? Will be added to his income and tax. So even if you are a senior employee and you earned, let's say, less than 1,500, all your overtime, the amount of overtime that you have enjoyed within that month will be added to your income and tax. But if you are a junior employee and your qualifying employment income annually basic does not exceed 18,000 Ghana cedis, then overtime paid to you first 50%. So the first 50% of your monthly basic salary, that's what you compare. This will be subject to tax at the rate of 5%. Amount in excess of the 50% will be taxed at the rate of 10%. Amount in excess of the 50% will be taxed at the rate of what? Of 10%. So take note of that. So the first 50% will be taxed at the rate of 5%. Any excess amount will be taxed at the rate of 10%. Now let's move on to bonus. So bonus, first 15% of your annual basic salary will be taxed at the rate of 5%. So if the bonus payment does not exceed 15% of your annual basic salary, it means the tax will be 5%. Amount in excess of the 15% will be added to your income and tax. Amount in excess of the 15% will be added to your income and tax. So the 5% tax is a final tax. It's a final tax. It means that portion, you don't have to add that portion back to the employee's income and tax. It is only the amount in excess of the 15% that will be added to the employee's income and tax using the graduated rate. Casual workers, it's 5% on their gross salary. Temporary workers, they are taxed using the graduated rate. Part-time workers is 10% on account for resident individuals. So part-time workers, other than those that their income will be subject to withholding tax. So it may be those that their income will be subject to withholding tax. Let's say examination, invigilation, marking, scripts, and those ones, their income will be subject to 10% withholding tax. Apart from those ones, any other person who work on a part-time basis, if the person is a resident individual, that person's income will be subject to tax at the rate of 10%. But if the person is a non-resident individual, that person's income will be subject to tax at the rate of 20%, So those basic things, just write them. Just take in your notebook, just write a summary, how they are done. Just write a summary. If you know
Non-resident is 20%, right?
Come again, senior.
Non-resident 20%.
Yes, 20%. Yes,
Other resident
it's 10%.
final.
No, on account.
All right.
Yeah,
But non-resident is final.
it's final. Non-resident, all their taxes are final. All their taxes are final. Yes, including all
Because you
their.
can't get them again.
You cannot get them again. Yes, you cannot get them again. So all their taxes are final. All right. So those things, just take your notepad, write them, write the shorthand note down. Simple. You take, just revise for your revision. All right, so let's take the question. This is your mock question. And I told you guys the questions in the mock, kindly take note of them. You kindly take note of them. Both the theory questions and the practical questions. I make in the mock, the questions were 50-50. The theories were 50, the practicals were also 50. So this question, Dr. Frank Yao, you guys have solved it. So you just see the way you have done it, if that is in line with the task principles. That's all. So we are starting with question 8 under income tax liability. Mind you, I will not be able to solve all the questions in the document, but I'll solve the most important ones with you. The rest, try your hands on them. Try your hands on the rest, because we have a lot of things to cover today. So Dr. Frank Yao has been in business for several years. He has submitted the following information and return file with the Domestic Tax Division of the GRE as Kwadasu for the 2022 year of assessment in respect of his business. So this man, Dr. Frank Yao, he is into business and at the same time investment and into employment. So pertaining to his business, he have declared the following result. So in the result, his net profit is 500,000 Ghana cedis. So this is examination of account. So we are going to subject the items in his returns to the tax principles. Very simple. So all the principles allowable, non-allowable, we subject the items in his returns to the tax principles. Now, additional information. He is married with 10 children who are in recognized educational institution. So before you come under the reliefs, you have a marriage or responsibility relief, which is how much?
1,200.
1,200. Then child education relief.
600 per one.
Your line, I don't know.
Yeah. Maybe I cannot talk today. I'll just follow them.
All right, okay. Your line today is giving us some feedback. Okay. So marriage or responsibility, 1,200 per month, per annum. Then child education, 600 up to a maximum of 3 children. So he have 10. They are all in recognized education. So we only give him 3. That will give you 1,800. Capital allowance agreed with GRE, 1,154.98. So we know how we treat the capital allowance. The capital allowance is in respect of the business. He received 6,000 as rent income from his Ebuakwa building. What will be the treatment? 6,000 received as rent income. How will be the treatment?
It's 8%.
Come again, Senior. I didn't hear you well, please.
Rent income, 8%.
All right. So what? So are you going to add it to his income and subject it to tax?
No, that's investment.
Yes, it's investment. But you know, when you are determining the accessible income, you determine it from all the three sources separately.
Yeah, so you do it under investment components, a segment, sorry.
So it means we will add the 6,000 to his income before we tax. Is that what you're saying, Senior? It means we have to include the 6,000 before we get his total accessible income. Then we have to grant the reliefs. Is that what you're saying, Senior?
No, we don't add the whole 6,000.
So how much do you add?
We take 8% of that and add as a tax.
We take the 8% out. So you are saying 8, so it will be 8% by 6,000. That'll give you how much?
480.
480.
480.
So you are saying we take the 480 out of the 6,000. So when we take the 480 out of the 6,000, how much will you get? You get 5,520. So, Mr. Philip, you are saying you should add the 5,520 to his income.
No, I believe the 8% is final.
It's final. So how are we going to treat the 6,000? Are we going to add it to his income before we subject it to the graduated rate? That's what I want to find out.
No, I think we charge the graduated and add the 8% tax we've gotten to that.
All right. You see, this is final tax. Withholding tax in your syllabus is 10 marks.
Yeah.
So you have to know withholding tax on account and withholding tax that are final. You have to know them. Now, rent income, residential is 8%, commercial is 15%.
15%, yeah.
Rent income tax, withholding tax, they are final. It's final. So it means that when the tax is final, the income that suffered the tax, you don't have to add that income to the employee's income when you are determining the employee's accessible income. No, you don't do that. The tax is final. It's final. It means the tax
So that's what I'm saying. That after we charge the graduated, we add the proceed from the 8%.
Oh yes, but you don't add. You don't add because this one has already been paid. So
okay.
if you want to know his net tax liability, the 480 has already been paid. So you don't add again.
Okay.
But let's say if you want to know, if the question asks you to determine his total tax paid for the year,
that's when you add it.
That's when you add it because this one has already been paid on his behalf. So for his net tax liabilities, you don't add it again because it has already been paid. So this is final. So know the withholding tax. I'm saying that withholding tax in your syllabus is 10 marks. So know final and on account. Very, very important. If the tax is on account, you know how you treat it. So let's say interest. But interest too, there are some rules regarding interest. I put some summary on the summary of withholding interest and dividend tax on the page. I hope you guys have gone through it. Interest income is subject to withholding tax. The rate is 8%. But there are some
mortgage.
Come again, Senior.
On mortgage is exempted.
On mortgage is exempted. On mortgage is exempted. And interest paid to a resident individual is also exempted. Interest paid to resident financial institution is also exempted. But interest paid to a resident person other than an individual or financial institution will be subject to withholding tax at the rate of 8%. So interest paid to companies, manufacturing business, agro-processing business, interest paid to them, 8% withholding tax will be deducted. But that tax is not final. That tax is on account. So it means that the gross income is the gross we add. The gross income have to be added to the employee's income before you determine the total accessible income, subject to tax. Now, when you get the tax charge, the tax liability, come and grant the 8% as a tax credit. As a tax credit to the employee. Take note of that. All right. So the rent income will not be added. He is also a lecturer at Amstead, where he earns a basic salary of 8,500 per month. So he's into employment. His basic is 8,500 per month. So to get the annual, you multiply it by 12. Now, the next additional information, the sundry expenses disclosed in the financial statement were identified as excluded and domestic expenditures. So you know excluded and domestic expenditures are not allowable deduction for tax purpose. So sundry expenses amounting to, how much is that? 31,023 Ghana cedis 90%. We disallow this. We add it back. We disallow this. We add it back because they are domestic and excluded expenditure. In addition, he receives a market premium pegged at 114% of his basic pay. So let's deal with the first sentence first. The market premium. The market premium, 114%, pegged at his basic pay. How do you treat it? How have you guys treated it during your solution? How will the treatment be? The market premium. All right, so the market premium, 114%. The market premium is taxable. Market premium is taxable.
They
Now,
are ready to the bill. They are ready to the bill. I texted him.
Taxable as graduated, right?
oh, you add it to the employee's income and tax. Yes, as graduated, yes. It's taxable as graduated. So you add it to the employee's income and tax. But you see, this question is crafted in a way that if you don't know, you go and apply 114% of his basic pay, which will be wrong. You see, the market premium is pegged at 114%. So it means that if the basic pay is 100%, then the market premium will be 14%. Because there's no way the market premium will be more than the basic pay. It's not possible. You see, now let's do the basic pay, 8,500 by 12. How much will you get? You get 102,000. Now, if you do the market premium to be 1.14 by 102,000, how much will you get? You get 116.
116, 280.
280, you see. So the market premium alone cannot be this amount. So it's the market premium plus the basic pay that will give you 116, 280. So the market premium alone cannot be more than the basic pay. It's not possible. So it's the excess on top of the 100%. That is the market premium. So if you do 1.14, it means you are increasing the market premium by 14%. So it's the 14% in addition to the market premium. That will give you, so this will be his total income. His total income from employment for the year, which will be subject to tax. So the market premium alone is just 14% of his basic pay. So when you calculate the market premium, you add it to his basic pay, you are supposed to get 116,280. Now, the second part, he is a registered contributor to GUSS, Ghana University Staff Superannuation Scheme, at the rate of 25%. This is Provident Fund, Tier 3, Provident Fund contribution. Now, the law is that both the employee and the employer, their aggregate contribution to Tier 3 will not exceed 16.5%. So it means that we can only grant him that relief up to a maximum of 16.5%. The excess that he has contributed, we cannot give you relief. Though that one will not be deductible for tax purposes, no. So the tier 3, which is the provident fund, you just do 16.5% multiplied by the 102. That's all. Multiplied by the 102. That's all. So let's solve this question. Fast, fast. You guys, you have to be fast and be giving me the question so that we finish fast. Income tax liabilities. So I think this is question number 8. Dr. Frank Yao. The basis period, these small ones, I beg you, be writing them. Basic period is January 1, 2020. Which year are we doing the assessment? 2022 to 31 December 2022. The year of assessment is 2022. All right. So computation of tax liability. So we have to compute his tax liability. So we start with the net profit as per account, which is 500,000. Then let's do the add backs. There are some items that were deducted that are supposed not to be deducted. So add back the following. So the first thing we will add back, I think we have depreciation in the question. How much is depreciation?
289,025.
025. All right. Then we add back the sundry expenses. We were told in the question that sundry expenses are domestic and excluded expenditures. So we add it back. .9. So the two give you how much? Give you 320,048.90. Now, let's go back to the question. There are some other items that were deducted. So let's find out if those items deducted, if they are actually a deductible expenditures. So salaries and wages is deductible, utilities is deductible, sundry expenses, we've added it back, repairs and improvements is deductible. But the repairs and improvements, there is a rule on it. The rule is that the repairs and improvements should not exceed 5% of the written down value of the pool at the end of the basis period. Know the rule on repairs and improvement. The rule is that the repairs and improvement is deductible, but the amount that will be deductible shall not exceed 5% of the written down value of the pool at the end of the basis period. Now, in this question, we were not given the written down value of the pool. We are not giving any depreciable asset for us to compute the capital allowance, because the capital allowance has already been agreed with the GRA officials. So we cannot do that. So in this case, we allow the whole amount. We allow the whole amount. But in case in the question you are giving the depreciable asset, the amount of repairs and improvements, you have to subject it to the 5% of the written down value of the pool at the end of the basis period rule. Take note of that. Depreciation charge, we've added it, disallow it, it's an excluded expenditure. Bad debt is an allowable, but provision for bad debt, that one we only allow specific provision. General provision for bad debt is not allowed, but bad debt itself, which is not a provision, is an allowable deduction. Provisions too, we allow specific provision, but if the question tells you the provision for bad debt is general, then we disallow it. Business travels is allowed. So we've done that. Financial charges is allowed. Now, let's go back to our working sheet. If you have any question, you can ask. Yes. So we have our total add backs. So let's add it to 5,000. This will give us 820,048.90. All right. Now, we deduct, we take our capital allowance out. Capital allowance is given in the question. Capital allowance is given in the question. 1154.98. So when we take the capital allowance out, yes, senior.
The addition of the profits and add backs, how much is it? 820.
048.9. Then
Okay.
we take our capital allowance out 1154.98. So our accessible income from business or our chargeable income from business. So our chargeable income from business. Our chargeable income from business. It will give us 818,893.92. Are we okay? I believe we are fine. Now we have gotten our chargeable income from business. The same one is into employment. The same one is to employment. So let's add the income from employment. So let's go to employment income. So the first thing is the basic salary. So his basic salary, we are told that he is on 8,500 per month. So that will give us 102,000 Ghana cedis. We add the premium. We add the market premium. So the premium is 14%. So 14% by 102,000. This will give us 14280. When you add it, his total income from employment to be 116,280 Ghana cedis. Are we together? I believe we are together. Now, his total accessible income will be 116,280 plus 818,893.92. So this will give you 935,173.92. So this is his total accessible income. The income from the rent, I've already explained that one is a final tax, so we don't add it. Now, let's take off the reliefs. We deduct the reliefs. So you will be entitled for SNIT contribution, which will be 5.5 by 102,000. Are we okay with the SNIT? We are okay. There's no doubt about the SNIT. Even though the question didn't say anything about SNIT. But so far as you are into employment, the tier 1, that one is automatic deduction. So even if the question did not say anything about it, you have to compute the SNIT. So that will be 5.5% by 102,000. So this will give you 5,610. He is married, so that will be responsibility relief of 1,200. We were told that you have 10 children, 3 of them are in school. All of them are in school, but you give him the child education relief up to a maximum of 3 children. So child education. So that will be 600 multiplied by 3, 1,800 Ghana cedis. What other relief again? So the tier 3, GUSSS. That will be 16.5% multiplied by the 102,000. How much will you get? You get 16,830. So his total reliefs will give you 25,440. This is total relief. When you take it out, his taxable income, will be, Mr. Philip, how do you do the calculation?
Please no, I'm writing.
You are writing? Okay. All right. So his taxable income will be 1,909,733.92. This is taxable income. So you have to compute the tax charge. You have to compute the tax charge. Now the tax will be computed using the graduated rate. Mr. Philip, don't ask me to go back because you are not adding. So let's compute the tax. So computation of tax charge. So we are using the graduated rate. So the taxable income of Dr. Frank, the taxable income is 909,733.92. You are lost at where?
Well, you move on. You move on from there.
Yes, I'll go back. This is the taxable income.
I just want to take the relief from it.
The total relief.
We have 25,000, right?
Yeah, 440. Out of the total accessible income, the chargeable income will be 909,733.92. Now, the tax charge, we are using the graduated rate. So, the first 5,880, the rate is nil. This one is nil, tax free. And the amount is also nil. The next 1,320, don't worry about the graduated rate. They'll give it to you in the exam. This will give you 66%. Then the next, but if you know this one, Charlie, you don't even need to look at it. Just write the figures and move forward. So the next 1,560, the rate is 10%, which will give you 156%, followed by the next 38,000. The rate is 17.5%. This will give you 6,650. Then followed by the next 192,000. The rate is 25%. This will give you 48,000. This will make your work fast. You move fast. So this will give you 48,000. All right. The next, this month, the chargeable income is big. So the next 366,240. This is 30%. This will give you 100,872. So the remaining amount in excess will be taxed at the rate of 35%. Now let's find the excess amount. So 366,240 plus 192,000 plus 38,000 plus 1560 plus 5880 plus 1320. Is that correct? 92, 38, 1560, 58. Okay. So out of 909, 733.92. All right. So this will give you 304,733.92. So 35% by 304,733.92. So this will give you 106,656.78. Point 87 rather, 0.87.
President, the 5% is this 66 cities or 66,000?
The 5% is 66 cities, 66.00. Yes.
Okay.
Yes. So his total tax charge will be, let me add, plus 100,872 plus 48 plus 6650 plus 156 plus 66. So this will give you 262 400.87. So this is total tax liability for the year 2022. So we are done with the questions. We are done with the question. So the tax charge is 262 400.87. Can I move on? Can I go to the next question?
Please wait small.
Yeah, one Shadi, your hand is up.
Please, can you go back to the task, the chargeable task?
Right. One Shadi, your hand is up.
Please, can you go over the market premium?
Can I go over the
Market premium.
All right, the question says that
What is
he received a market premium pegged at 114% of his basic pay, Now, the market premium is subject to tax. It's subject to tax using the graduated rate. So what you do simple is just find the market premium, add it to his salary and tax. Find the market premium, add it to your salary and tax. Now, the market premium is a form of an allowance. So add it to your salary and tax. Now,
Senior, your 366,240. The one at 30% is wrong.
it's wrong, eh?
Yeah, I'm getting 109,872.
366.
240. Is it point or?
No, it's not point.
Times 30%.
It's 109. Yes, it's 109.
109,372.
109,872.
372.
No.
Sorry, 872.
872. Yes, it's wrong.
Yeah.
Thank you very much. It's 109. So that means it's undercut by 9,000, right?
Yes.
So it will be 271. So the total tax liability will be 271. $271,400.82.
So one shadi. So the market premium, the question said 114 pegged pay 114% of his basic salary. So it means that if the basic salary is 100%, the market premium will be 14%. The market premium will be 14%. So it's not that the total market premium is the 114%. No. There's no way the market premium will be more than the basic salary. The basic salary annual is 102,000. That is 8,500 by 12. This is 102,000 Ghana cedis. The market premium cannot be more. The market premium alone cannot be more than the basic pay. So it means that when you do the market premium, 1.14, the increment multiplied by 102, this will give you 116,830. So it means this will be his total salary from the employment. So the market premium alone is just the 14% multiplied by the 102,000. If you add it to the basic pay, which is the 102, that will give you the 116,830. Then I believe you are fine.
Yes, please.
Okay.
Thank you, sir.
All right. Thank you too. I'm having 6-3. Sure. You having what? The total, the net 638,333.05. What net? When you take the tax from the income. His net income. Me, the tax I'm interested in. Is the tax the question said I should find? So if they ask you to find his net income, you can do that. But me, the tax I'm interested in is the money that the government will get. All right, let's go to the next question. So I've already explained most of the thing already. I want to go to corporate income tax. I want to go to the corporate income tax. But the next question, question 9, we'll go through them. We have partnership also there. So we'll go through them, how the treatment will be. I won't solve it in full. I won't solve it in full. I only solve part of it. Maybe how to compute the consolidated basic salary. Then just go and add the allowances, add the benefits in kind. Then you are good to go. You are good to go. So this woman, Sichope, was employed on November 1st, 2014. His salary scale is 100,000 by 6,000 up to a maximum of 160,000. So if you see this scale, don't be panic. It's just that your employment, your first year salary will be 100,000. Every year, the increment will be 6,000 every year, up to 106,000 Ghana cedis before you move to another scale. So this is the scale. Now, she was employed in 2014, November 1. The assessment year is 2019. So it means that you have to calculate his salaries from that time, from 1st November 2014 up to 2019. That's what we call the consolidated basic salary. When you get that, come and add the allowance, add the professional allowance per month, utility per month, houses per month. You have that is the cash allowances. So added to the consolidated basic salary, that will give you the total cash emolument. Come and find the benefit in kind. Her employer provided her with a well-furnished accommodation for which she paid 5% of her consolidated basic salary. So this is accommodation with furnishing. The rate is what? 10%. Yeah. And she paid 5% of the consolidated basic salary. So what you get for the consolidated basic salary, find the 5% of it and come and deduct it from the 10% of the total cash emolument. Now let's compute the consolidated basic salary. That's the only thing I'll do. Then you go and complete it. Now, question 9. Sichope. Okay. So the salary scale is 100,000 by 6,000 every year up to a maximum of 160,000 Ghana cedis. Now, consolidated basic salary. So she was employed on November 1st, 2014. So from 1st November 2014 up to 31st October 2015, her salary will be the 100,000 Ghana cedis. Now, for the next year, that will be November 1, 2014 up to 31st October 2016, the salary will be 100,000 plus the 6,000. This will give us 106,000 Ghana cedis. For the following year, that will be November 1, 2016 up to 31 October 2017. That will be 100,000 plus 106,000 plus the 6,000. This will give you 112,000. The next year will be November 1, 2017 up to 31 October 2018. That will be the 112,000 plus the 6,000. This will give you 118,000 Ghana cedis. We want 2019 year of assessment. So let's move on. November 1, 2018 up to 31 October 2019. That will give us 118,000 plus the 6,000. This will give us 124,000. 2019, we stopped at October, so we still have 2 more months for 2019. So let's move on. November 1, 2019 up to 31 October 2020. This will give us 124,000 plus 6,000. This will give us 130,000. Now to get the consolidated basic salary. To get the consolidated basic salary, we want the 12-month period. The basis period is for 12-month period. Now, from here up to here, the last two, that is where we can get our full 12-month period for 2019. Now, for the first one, November 1, 2018 to 31st October 2019, the total salary is 224,000 Ghana cedis. So for this one, October have 10 months over here. That will be January to October 2019. So 2019 year of assessment have 10 months period over here. So we need to find the proportion of the 10-month salary of the 124,000 Ghana cedis. So that will give us 10 over 12 multiplied by 124,000 Ghana cedis. Plus the last one, we have 2 months over here. So November 2019 to December 2019. That will give us 2 months. So 2 out of 12 multiplied by the 130,000 Ghana cedis. When you do this, this will give you 124,000 Ghana cedis to the nearest whole number. So this is her consolidated basic salary. This is her consolidated basic salary. So this is where you calculate the cash, you have to come and add the other cash allowances. I believe we can move forward. I believe we are fine. All right, let's move on. So just come and add the other allowances, the other cash allowances. So the other, you add 6,000, 4,800, 3,600. That will give you your total cash emolument. Come and calculate the benefit in kind. We've talked about this one already. Accommodation, well-furnished accommodation, 10% of the total cash emolument, 5% of her consolidated basic salary was paid, which was deducted. All right. A car was put at her disposal for 24 hours. Every day, the car is there. She was given fuel in addition. So this is car and fuel. How much is the rate? Car and fuel, the percentage is what? It's not 10% of the total cash emolument.
Without driver, it's 10% up to 1,250.
A month, per month.
Yeah, per month.
Yeah, per month. So she was giving other non-cash items. So 4,000 Ghana cedis, you add it as the other non-cash items. When you come to the reliefs, she is a contributor of SNATE, 5.5% of the basic pay. Then she also contributed 5,000 towards a provident fund. So this 5,000, you find out if all the 5,000 will be allowable, will be granted as a relief. She can contribute up to 16.5% of the basic pay. So if you do 16.5% of the 125,000, what you get will be more than the 5,000. So it means that all the 5,000 will be given to her, as a relief. Yeah. She is married, so there'll be responsibility, 1,200. A child schooling in Togo. The child is not schooling in Ghana, so she cannot get the child education relief. She received an endorsement fee, 1,200, 10% net of withholding tax. Endorsement fee will be subject to withholding tax, 10%.
10%,
we are told that the 10% was already deducted before she received the 1,200. Now, endorsement fee, the withholding tax, is it final or it's on account? Is it final or it's on account?
It's on account.
Endorsement fee is final. If endorsement fee is not on account. Endorsement fee.
Senior, let me get clarity on this.
Okay.
On what basis do you say a tax is final, and on what basis is it on account?
You cannot determine that. The principal have already determined that. So you have to know. Your duty is just to know.
To just move it like that without knowing the rationale behind.
There's no way. There's no way. You cannot determine that. The tax principal has classified it. That's how they have classified it. So you cannot determine whether how it is on. No. It's already classified. So your duty is to know that this one is final. This one is on account. That's all. There's no way that there's rationale. We cannot talk about the rationale now. We are not lawyers, so we cannot talk about the rationale right now. Getting to know why do you put this one final, why do you put this one on account. That is not our duty. It has already been done. So our duty is just to know this one is final.
I was thinking to help us to identify them, because when you subject to that rationale, you will know that is this or that.
Sorry for you. Unless we go to parliament, we are not the law. We are not those who make the law. So we can't do that now. Sorry for you, senior. All right, so you have to know. But I gave you a summary of that. It's in this note.
Yeah, I know you have a summary there, but I just want to know so that by heart you can just suggest something to something and know that this is where it starts.
Okay, that cannot be done for now. So sorry for you, senior. So endorsement fee is final. But these things, the more you do them, the more you know. The more you do them, the more you know them. That this one already is final. This one is on account. Director's fee is on account. Director's fee is on account. So it means that the director's fee, 10,200. This is net. So you have to find a gross. You have to find a gross. So how do you get a gross?
Gross it up.
How do you gross it up?
This is 20% then?
Yes.
And so the 100% will be yeah.
It will be 10,020 divided by 0.8. So you do your 100 over 80 multiplied by 10,200.
Yeah.
It will give you the same figure. So gross it up. When you gross it up, how much you will get?
100 over 80.
When you gross it up, how much? I don't know what the cinema is saying. No. You know, the cinema is lost. I don't know what village he has found himself today.
Why? He travel?
Maybe he's in some village.
Our shack is at large.
I tell you. Today we go suffer tire. So if you gross it up, you get 12,750. Then I add it up. So it means that the tax amount, the 20% tax amount.
And you grant the 20 as credit.
As a tax credit. After you get the total tax liability, grant the 20 That would be what? 12,750 minus 10,200. How much will you get?
Whereas you add it up in tax.
Yeah. So come and you deduct the tax, the 20% tax, come and grant it as a tax credit. The tax withheld on her salary for the year, grant this one to as a tax credit. Grant this one to as
So
a
yeah,
tax
let
credit.
me come in.
All right.
If you are granting only the tax component that was taken earlier as a tax credit,
Yes.
then are you not cheating the person? Because when the tax is taken from the gross, the others becomes his benefit. So we need to take the total of what they've taken that tax from.
The total income.
What I mean is, you see, I earn 12,000,
You earn 12,000.
and then I paid a tax of 20% on it.
Okay, 20% is gone. So
Mhm.
it means you receive how much? How much will you receive? 80%.
Yeah, I'll take 80%.
Yes.
Okay. Then at the end, they are coming to add it back, and then grant me only the tax that was deducted.
Yes, that is the
What of
whole
my
brain.
benefit? Come again?
That is the brain. You see, the income, that is the whole brain. Oh. The income that's offered the tax. It means
Mm-hmm.
that the tax withheld.
Mm-hmm.
That is
Yeah.
not the only tax you have to pay on that income. No.
Why? By virtue of the tax rate going up, or
No, you see, that income, you see, you know the concept of the withholding tax.
yeah,
DRA want to get that one in advance.
tax in advance. Yeah, I know.
We want to get that one in advance. Now,
Yeah.
the income that you have earned as an individual,
Yeah.
that income will be taxed using the graduated rate. Example is that
Oh, okay. Just for them to get the tax in advance, that's why they are
exactly
giving
they
that.
are giving the withholding tax just for us to get the tax in advance. Who is laughing? One Shadi.
Yeah.
Are you okay, senior? Somebody is
Yeah,
disturbing you over
yeah.
there.
I'm okay.
Somebody is disturbing you
okay.
over there.
I'm okay. I'm okay.
All right, okay. Mr. Senior Philip,
Yeah, I got you, sir.
are you okay?
I got you.
We thank God you are okay. Mm. All right, so let's move on. So the question 9, you go and solve the question 9. This will be question 10, Anna. It will be question 10. Why is it question 9 again? So the question 10, which is the John Ofori, go and solve it. John Ofori is an amputee. So that should tell you that there will be what?
25% will not be taxed.
Exactly. There will be disability relief. So
Relief, yeah.
yes, you do that. You find the scale, they giving you the scale. Come and add all. I spoke about the entertainment allowance already. This one is unaccountable, so add it. If the entertainment allowance is accountable, you don't add. But this one is unaccountable, so we are adding. Now, interest on treasury bill. There's some information given here. Interest on treasury bill that the man has received, 500 Ghana cedi. Will it be subject to tax?
To an individual, no.
I'm doing withholding tax two at once. So when I get to withholding tax, I'll just brush over it. I'm doing withholding tax two at once. Interest from treasury bill. Is it subject to tax?
To an individual, no.
Okay. The who will it be taxable to? You said to an individual, no. So who will it be taxable to? Somebody also
Corporate
said.
they don't.
Somebody also
Corporate they
says.
don't tax it.
So it's an exempted. It's an exempt income.
Corporate is also not taxed.
Yeah. So it's an exempt income. So treasury bills, we don't tax it. It's an exempt income. Government bond and the rest is not taxable. So this one is an exempt income. So you see this question, the examiner gave you different types of withholding tax to see whether if you understand the concept of the withholding tax. Dividend, 8%. Dividend, will it be subject to tax?
Yeah.
8% withholding tax. Is that not it?
Yes, but final.
It's final. Is it
Yeah.
It's final, right? So you don't add it.
Yeah.
Don't add a dividend. We just discard director's fee. We just discard director's fee. Director's fee, the rate is 20%. In the question, they gave you 10%. Don't tell the examiner that you know the rate will be 20%. So why they give you 10%? So you are going to use 20%. No. Use what the examiner gave you. Use what the question
But
gave you.
under assumption, you can use a 20%.
Then you add no to it.
That's what I'm saying under assumption.
All right. Okay. Then you add no to it. You are good to go. All right. Let's do partnership. So for partnership, we know partnership already. The partnership itself as an entity is not subject to tax. The tax lies in the hands of each individual partners. So you prepare the partnership account, get your profit for distribution. The profit distributed will be subject to tax in the hands of each individual. Very simple. Now, the whole concept is that every allowance is paid to partners. Every salary is paid to partners. Interest on loan, interest on capital. Every allowance is paid to partners must be declared to GRA for tax purpose. So you look for ways and means and make sure that every allowances that each partner has enjoyed, you declare that amount and pay tax on it. So it's very simple. If those allowances were considered, so in determining the profit for distribution, you don't deduct them, you don't consider them. So when you are done, you share the profit, come and add it to each individual partners and tax. Very simple. Come and add it to each individual partners and tax. So partnership, I only do the first question, you go and do the rest. It's very, very simple. So the question 11, this question 11 here, this question suppose is your more question. Kindly take note of it. They can just drop this question for you. So we have to calculate the taxable income of Edem Enterprise. The taxable income of Edem Enterprise. So if this question will come, it will be for 10 marks. It will not be for 5 marks. But me, it's mock. I've loaded the question, so I have to reduce the mark so that all the total mark will be the 100%.
No wonder after the mock, my blood came down.
Your blood is what?
It came down. You loaded the questions.
Yes, it's mock. It's to prepare you for the exam. So I have to load the questions. So this question, this is the only question I'll do. The rest, just go and those deducted, add them back, share the profits, and you are good to go. Now, this question, we are not asked to calculate the income tax payable by each of the individual partners. If any
That's
question,
coming.
come again, see there.
Question hot.
Question 10.
The question 9, we have two question 9 here.
Yes. So this is supposed to be question 11. Yes. This is supposed to be 11. But what we have here now is question 10.
That's Kofi Kwame, right?
Kofi Kwame and Koku.
Yes. Okay.
Yes. Trading as Edem Enterprise. So their profit before tax is 200,000 Ghana cedis. Now, the following information were considered in arriving at the profit above. Salaries paid to the managing partner. The managing partner is Kweku. Now, all these allowances were paid to only Kweku.
Kweku is the managing partner. But this one we call it.
Is the more question.
Okay.
Is the more question. Is the more question. So Kweku is the managing partner. So this 1.02 million Ghana cedis was paid to him as what? As a salary. So go and add it back. And it was deducted before they arrive at the profit. So add it back. Interest on additional capital, add it back. Allowances to the managing partner, add it back. Utilities refunded to the managing partner, add it back. Then 13th month salary paid to staff. What will be the treatment of this? 13th month. Yeah, 13th month.
It's like bonus.
It's like bonus. Okay.
It's like that will be the bonus given them.
So should we add it back?
But we have a way of treating. Okay, we can add it, but it's a partnership, so we can add it.
Yeah, we will add it back. But you see, this 13-month salary, the basis period is 12-month period. Is that not it?
Yeah.
We are doing 12-month period. Salary paid in the 13th month. Each company with how they treat it. Some companies will treat it as bonus. Motivation for staff. December has come,
Yeah.
so we'll give you double salary that month.
Those are the needs.
Yeah, so some companies will treat it as bonus. Some companies will also treat it as additional salary. So depending on how the company is treating it with the tax treatment. If the company is treating it as bonus, you know how the treatment will be for bonus. Then if some people are treating it as salary, you know how the treatment will be. But in this question, they say it's salary paid to staff. And for tax purpose, we are using 12-month period, which is the basis period. So salary paid for the 13th month cannot be deducted in the current year. So there's something we call cutoff. Cutoff, every transaction that will be subject to tax examination must be within the basis period, the year of assessment. If the transaction goes out of that year, you don't consider that one. So 13th month has gone out of the year of the current basis period. So you add it back. So you go and add it back. You add depreciation back. After adding depreciation back, come and deduct capital allowance. Then you get the taxable income that will be distributed to partners. You get the taxable income.
Senior,
Yes.
I heard you said it has gone beyond the basis period.
Yes, and they have deducted it already. They have deducted it.
Okay. So you are adding it back. Okay.
Yes, they have deducted it. So you add it back. They have deducted it. So you add it back. So you add depreciation 2 back. If you add depreciation 2 back, then that will give you come at less capital allowance. The less capital allowance, then you have your taxable income. That's what the question is asking you to do. We don't have ratio to share. So that's what the question is asking you to do.
So will I get mark for that?
Mark for what?
For stating that they don't have profit and loss sharing ratio and therefore we can't share into individuals.
Oh, yes, you can let the examiner know, but it's not part of the requirement. But you can let the examiner know to know that you are on top of issues. Because we are giving.
I've stated it in my.
Yeah, I saw it. Because we are giving, they said the managing partner has 3 children who are all in schools. So after sharing the profit, if like they give you a ratio, you share the profit.
Yeah,
you
would have considered with that.
Consider with the reliefs.
Yeah.
You are considered with the relief. Yes. So, but if this question will come for you, they will give you the ratio.
Okay.
They will give you the ratio. 1 minute, certain number is calling me. Let me find out who the hell is this. All right, guys, sorry for that. Let's move on. All right, so partnership, I'll not waste my time on it. It's very simple. Let's go to corporate income tax. There are a lot of things we have to know over there. Corporate income tax. It's also for 15 marks. There are a lot of things you have to know here more than the income tax liabilities for individual and partners. Now, the corporate income tax, there are some rules. Is my mic on? Can somebody hear me? Yes, my mic is on. All right. There are some rules Hey, let me find you, Juanita Buachi Dankwa. Is Juanita here? Let me find if the lady is here. Sister Juanita,
Yes, sir.
you did there?
He's
You are,
on there.
you are not saying anything. No? Are you okay? Are you following?
Yeah, I'm following.
You are following. You are okay. You are very fine.
Yeah, I'm
All right. If you have any problem, you can just chip in and ask any question you want to ask.
thank you, sir.
All right. For corporate income tax, 15 marks. There are some principles you have to know them. If you don't know them, it's over you. You have to know them. The first thing is capital allowance. The first thing is capital allowance. So let's do some quick recap before we take the questions. The first thing is capital allowance. You have to know how capital allowance is computed. Because for your maths, for corporate income tax, they will just pick one of the principle and examine you on it. We saw it in the pilot questions. They just pick repairs and improvement. Give you a question on it for 10 marks. There's some other theory questions for 5 marks. Now, the first thing you have to know, no doubt you may see it in your exam, is how to calculate capital allowance. So you have to know everything about capital allowance. You have to know everything about capital allowance. In taxation, we don't allow depreciation. So in place of depreciation, we give you capital allowance. Now, the method of calculating capital allowance is different from the method of accounting depreciation. It's different. That's the reason why in corporate reporting and financial reporting, we have something we call deferred tax. We have something we call deferred tax. It's between the treatment of the items, the assets of the company. The company will treat it using accounting depreciation, but the taxation purpose, we use capital allowance. So the rate of depreciation will be different. A company may have an asset, depreciating that asset. Let's say if company have computers, company may decide to use reducing balance or straight line and use the rate of 10% to depreciate the computers. So if they're using straight line and they're using 10% depreciation, it means this computer will last in the business for 10 years. But for capital allowance purpose, we classify computers under pool 1. And pool 1, the depreciation, the capital allowance rate is 40% on reducing balance. It means that the company, they are using, let me even say they are using 20%. So it means that the computers will last for 5 years. But for capital allowance purpose, the tax authority is using 40%. So it's just 2.5 years. So 2.5 years, they will remove that asset from their books. But the company will keep it on for additional 2.5 years. They'll keep it on and still be calculating depreciation. The tax authorities, 2.5 years, that asset is off their book. So you will see that there'll be a difference between the total depreciation for the company and that for the tax authorities. That will bring what we call deferred tax. IAS what? IAS 12. Income tax. Now, when we come under capital allowance, we use the pool system. And you have to know that capital allowance is granted on depreciable assets. And there's rules regarding granting capital allowance. We have pool 1 to pool 5. The pool 1 to 3, they follow strictly the pool system. So it means that all assets that belong to the pool must be added together. You add them together. You add their balances, their amount together. Now, for pool 4 and 5, the 4 and 5 does not follow the pool system. So it means that if you have any asset that belongs to pool 4, you cannot add the balances together. You put each of them in a separate pool. So you may have, for pool 4, we have building and assets of permanent structures. So you may have different type of building. You may have office building. You may have factory building. You may have warehouse. All these are different type of building. For capital allowance purpose, let's say you have office building, the value is 2 million, factory 1 million, then warehouse 5 million. You cannot add the total and say the total building is 8 million. So you are granting capital allowance on it. No, we don't do that. So it means that you put office building separately, 2 million, factory building separately, 1 million, warehouse separately, 5 million. And the capital allowance for pool 4 is 10% on straight line basis. So it means that the capital allowance will always be on cost. The capital allowance will always be on cost. Now, pool 1, the asset that belong to pool 1, we have computers and other peripheral devices. So computers and other storage devices, computers and 8 software, hard drive, pen drive, and the rest. Pool 1, and the capital allowance is 40% on reducing balance. Pool 2, class 2, the capital allowance is 30%. So this one we have assets that are movable or movable properties. So you have cars, automobiles, buses, and the rest. You have plant and machinery used in manufacturing. So you have to take note. If the company in question is a manufacturing company, know that if they have plant and machinery, that will be put under pool 2. And capital allowance is 30% on reducing balance. Now, for capital allowance sake, under pool 2, we have vehicles. You have vehicles, and the vehicles are classified into 2. So you have commercial and non-commercial vehicles. And for the non-commercial vehicles, for capital allowance purpose, we restrict their value to 75,000 Ghana cedis. We restrict their value to 75,000 Ghana cedis. But for the commercial ones, we don't limit the value. So the law defined the non-commercial vehicles to be the SUVs, the sports utility vehicles, those saloon cars, Pajero, Nissan Patrol, and the rest. A vehicle that cannot carry more than 13 passengers. Take note, 13 passengers. Or that cannot carry a load up to more than half a ton, then that would be a non-commercial vehicle. For capital allowance purpose, you limit the value to 75,000 Ghana cedis. Now, in the question, when the examiner tell you motor vehicle, they just said, oh, motor vehicle. They did not give you the type of motor vehicle. You are not given the type of motor vehicle. Limit the value to 75,000 Ghana cedis. Now, if they say motor vehicles, there is S, don't limit the value. You don't know the number. Don't limit the value. Now, if the question say motor vehicles, then they say into bracket two number motor vehicles. And the question go ahead to say that the vehicles are saloon car. They're saloon car. That means they are non-commercial vehicles. Maybe the one they give you, the two, they are giving you 175,000 Ghana cedis for the two. And they are telling you they are two number vehicles. And they said they are saloon cars. Limit the value to 150,000 Ghana cedis. But if the question is just general, motor vehicles, you don't know the number, don't limit the value. Don't limit the value. Take note of that. For pool 3, we have office equipment, furnitures and fittings, and the rest, office equipment, all of them, 20% on reducing balance. Pool 4, buildings and assets of permanent nature, 10% on straight line. Pool 5 is the intangibles, excluding goodwill. We don't give capital allowance on goodwill. Intangibles excluding goodwill, interest in line and the rest. And the capital allowance is cost divided by the useful life. Cost divided by the useful life. That's for capital allowance purpose. Now, let's go to another principle. Financial cost and financial gain. Now, what is the rule on the deductibility of financial costs? What the rule? What the rule on the deductibility of financial costs? The limit to which you can deduct financial costs? What the rule? Sister Juanita, do you know the rule? Let me ask you this one. You are the only lady. Today I'll disturb you. Sister Juanita,
Yes, sir.
you know the rule on the limit to which you can deduct financial cost.
Okay.
All right.
Hello.
Yeah, wait, let my sister finish. She know it. Let my sister finish
Okay.
before you come in. Sister Juanita, we are waiting.
Okay, the rule is 50% of that is chargeable
50% of,
from business. Adjusted chargeable income
okay. Uh-huh.
of a person
Is that all?
without including financial gains derived from
Okay. Is that all?
that's what I
So, okay. 50% of the adjusted chargeable income, but that is not all. That is not all. There's something you have to add. What do you add again?
You see, she said something about without including
Oh, yes,
financial
yes,
gain.
yes. So the
except
adjusted
without
that
including the financial gain
and the
and
financial
then
cost.
deducting the financial.
Exactly, yes. So it means that you have to calculate the adjusted chargeable income without including the financial cost and the financial gain. You find 50% of that plus something, you add something again. That's the limit.
Financial gain.
Plus the sum of the financial gain. Auntie Juanita. So the limit for deducting the financial cost is the sum of the financial gain and 50% of the adjusted chargeable income. The adjusted chargeable income will be calculated without including the financial cost and the financial gain. Mr. Jonathan, I believe you are fine.
Yes, please, I'm fine.
All right. So that's the rule. Now the excess amount. How do you do to the excess amount? The excess amount due to the limitation. How do you treat it? How do you treat the excess? You carry forward for the next 5 years and deduct it from any excess financial gain that you have made. The excess, you carry the excess forward and deduct it from any excess financial gain you have made. Good. Let's go to repairs and improvements. Repairs and improvements, the rule is that the repairs and improvements is allowable, deduction, but the amount that will be allowable shall not exceed 5% of the written down value of the pool to which the asset belongs at the end of the basic period. So it means that any amount of repairs and improvement that has been carried out on an asset, whether the repairs and improvement is capital in nature or is revenue in nature, it will be allowable, fine, we will allow it. But the limit is that the amount that will be allowed will not exceed 5% of the written down value of the pool at the end of the basis period. So what you do is, that year, if they give you written down value at start, the grant capital allowance, you grant capital allowance. Take the capital allowance out, you get the written down value at end. Written down value at end. Find 5% of the written down value at end. Compare that value to the repairs and improvement. That is the limit to which you can deduct the repairs and improvement. Now, the excess amount due to the limitation will be capitalized. That amount will be added back to the depreciation base of the pool, and capital allowance will be granted for that year. Any question? All right, I believe there are no questions. So that's the rule. So if you take any question, you subject the question to the rule. Now let's
Please
go
over, let
to,
me hear.
I should do what?
The repairs and improvements.
So I'm saying that the repairs and
The
improvements, whether
amount allowed to not exceed 5% of the written down value of the pool
at the end of the business period, yes.
at the end of the basic period.
Yes.
And then when there's excess, you do what?
You capitalize it. You capitalize it. You add the excess back to the depreciation base of that pool and grant capital allowance. So in some questions, they will not give you additions to the pool. They will not give you additions to the pool. We know how you calculate capital allowance. You start with the written down value brought forward. Add any additions to the pool during the year. Deduct any disposal made within the year. And you add what? Any excess amount of repairs and improvement. That will give you the depreciation base. Then you now have to grant capital allowance. Now, one key thing you have to note is that when do you start granting capital allowance? When do you start granting capital allowance? So note that capital allowance is granted from the date of commencement of business. The year, the date of commencement of business. So the date the person commenced business, that is where you start granting capital allowance. You don't grant capital allowance from the date the asset is put into use, unlike accounting depreciation. Accounting depreciation, you start to depreciate the asset the date the asset is put into use. The day the asset is ready for use and is put into use. But for capital allowance sake, we don't do that. We give you from the date you start operation. So you can start operating from May 1st June. Then you buy assets in November. You start granting capital allowance from the date you start 1st June, because capital allowance will be granted to you on a yearly basis. So if you start operation on June 1, you bought an asset in November 1, and we are assessing you for that year of assessment. We give you capital allowance on that year from the date that you start operation. And the formula for calculating capital allowance is A by B by C all over 365 days.
365.
A is the depreciation base, B is the rate, C is the number of days. Number of days in the basis period. So you know the basis period is a 12-month period. And from the time the person is preparing the account to the end of the year. So if the person starts work from 1st June, and let's say 1st June 2020, and you are assessing that person for 2020 year of assessment, it means the number of days in the basis period will be June 1 to 31 December. So you have to calculate the number of days. So this is where you have to know that our reader, 30 days are September, April, June, and November, so they can be able to get the days. Very, very important for the C here. If the person is in operation from January to December, the full 365 days, there's no need to include the C again. Just multiply the depreciation B by base by the rate. You are good to go. Because it will be 365 divided by 365, that will give you 1. All right, so let's take the question I have here. So you see, for corporate income tax, a lot of things we have to do. Now, the first question is on capital allowance. I believe you guys have solved this question already. Have you solved this question already? Setu, are you done with this question? Setu, I know he has done. He cleared this in a long time. So I feel
Was that one the try questions? Was it the try questions?
yes.
I'm checking. I'm flipping through my.
Oh, I know you have cleared this in a long time. Hmm.
Oh God.
All right, so let's go with the question. Let's start with the question. So, NASA Limited commenced operations on October 1, 2017. So you have to take note. Company started operation on October 1, 2017. Preparing account to 31
October,
days.
3 months to the end of the year.
Yeah, so that will give you how many days?
In days,
Now be 92 days.
let me say October has 31, November
30
30,
December.
and 31.
So that will give you 92 days.
Yes.
So it means that granting capital allowance for 2017 year, it will be for 92 days. The C will be 92 days. So in 2017, they bought some assets. So let's see how you classify the assets. Office, furniture, and equipment. This will go to which class? Office, furniture, and equipment.
Three.
This will
Put three.
This will be put 3.
That's what I'm calling slow.
This is pool 3. The air conditioners will be pool 3. The company bought land. You don't grant capital allowance on land. See, there's a two. Kindly mute your mic for us. All right, thank you very much. The company bought land costing 55,000. We don't grant capital allowance on land. Land is not a depreciable asset. So in this question, if they ask you to comment on two assets that the company cannot claim capital allowance on, the first one will be land. Bought office building. This is class 4. They purchase computers, class 3. They purchase photocopiers. Computers is class 1. They purchase office photocopier for 2,500. This will be class
3.
Class 3. All right. So capital allowance for the first year. Let's do that fast. This is why you guys have to help. You have to compute the thing fast and give me the figure so that we move forward fast. So this is corporate income tax. NASA Limited. So computation of capital allowance. Is that the requirement of the question? Is that the question that we should do? I start to calculate capital allowance. I know definitely that will be the requirement. So let's do 20.
We calculate the amount of capital allowance claimable.
Okay, so let's do 2017 year of assessment. All right. So 2017 year of assessment. So we have class 1. We have class 1 there. The rate is 40%. So we start with our cost. What the cost for the office equipment, or the office computers?
Office computers is 40,000.
Computers, so it's 40,000.
So furniture is 40, sorry.
So computer is how much?
Computers 150, 1,500.
All right. So computers is 1,500. Do you have class 2?
No.
No. So we have class 3.
No.
So class 3 is 20%. So add them. How much is the total for class 3?
62,500.
62,500. Okay. 62,500. $62,500. We have class 4. This is 10%. Class 4, what's the cost? Class 4, the cost is how much?
Class 4 is 700,000.
700,000. We don't have class 5, is that not it?
Yes.
We don't have class 5. So let's calculate our capital allowance. A by B by C all over 365 days. So let's do our workings. We'll do the workings here. Workings, so capital allowance computation. So we have our class 1, which will be class 1, which will be the base is how much? 1,500 by 0.4 by 92, all divided by 365. This will give us how much?
151.23.
So give me the nearest whole number. So 151, right?
Yes, 151.
Okay. All right. Then let's go to class 2. This will be 62,500 multiplied by 0. This is class 3. Multiplied by 0.2 by 92, all divided by 365. Then class 4. This is 700 by 0.1 by 92, all divided by 365. So class 3, how much is the capital allowance?
3151.
3151. Okay. The class 4.
One seven six
17644.
44.
All right. So get me the written down value at the year end. So you have to be calculating the total capital allowance. So while you are done, add the capital allowance and have the total. So this is written down value carried down. So pool 1, it will be 1,500 out of 151. So this is 1349. Pool 2, 62,500 out of 3151. This will be 59,349. Pool 4, 700,000 minus 17,644. This will give us 682,356. Auntie Juanita, I believe the figure is correct.
Yes, please.
All right, okay. So this is the written down value at end. So let's go to 2018 year of assessment. So we have our written down value brought down. Now, let's go to the question and see if we have any other pool. If you have any asset that belong to any other pool, apart from class 1, 3, and 4. So 2018, the purchase computers, this is television set. So this will be class 3. That's 3,500. They bought 4x4 vehicle, 200,000. We are told that a 7-seater. So this is a non-commercial vehicle. We limit the value to 75,000. So this will be class 2. Then the purchase file cabinet. This will be class 3. So the addition to the pool 3, the total will be 5,500 Ghana cedis. Is that not it? Then we have pool 2, 75,000 Ghana cedis. All right. So we have pool 2 now. So let me go and include pool 2 to the pooling system. All right. So we have our class 1. We have our class 2. We have class 3. And we have class 4. So the written down value for pool 1 is 1,349. For pool 2, we do a written down value for pool 3 is 59,349. For pool 4 is 682,356. All right, so let's do the additions to the pool. So pool 1, there was no addition. Pool 2 is 75,000. Pool 3 is 55,500. Pool 4, there was no addition. And there was no disposal tool in 2018. So our depreciation base, our base will be 1 for pool 1 to be 1,349. For pool 2, it will be 75,000. For pool 3 will be how much?
64849.
64849. Okay. All right. So let's calculate our capital allowance. So our capital allowance A by B by C all over 365. Then we'll get our written down value carried down. All right. So this one is 2018. The basis period is 365 over 365, 65. So just multiply the rate by the respective written down value of the pool. So pool one will be how much?
540.
540. Pool two. 22,500. Pool three.
12970.
12970. Pool four will be 70,000. Is that okay? Pool four will be 70,000. Is that okay?
Yes, please.
All right. So let's get a written down value at end. So pool four will be 162,356. Pool three will be pool three will be 51,879. Pool two will be 52,500. What about pool one?
809.
809. All right. Let's go to 2019 year of assessment. So let's move on to 2019 year of assessment. Year of assessment. So you have our class one, class two, class three, class four. So our rating down value carried brought down. Pool one is 809. Pool two is what? 52,500. Pool three is 51,879. So 51,879. This will be 612,356. Class five, we don't have anything for class five. All right. Now let's go to the question and see what are the issues that happened in 2019. Now in 2019, the company exchanged the vehicle bought in 2018 for 4 plots of land. All right. The value of the land agreed with the landowners was 200,000. And the exchange was deemed satisfactory to both parties and documentations were carried out. So it means that the vehicle bought in 2018 for 200,000 was sold for 200,000. Was sold for 200,000. So for capital allowance purpose, we have limited the 200,000 to 75,000. So the selling price of what? Of 200,000. We still have to find the 75,000 portion of it, which will equally give you 75,000. Which will equally give you 75,000 because it will be 75,000 over 200,000 multiplied by 200,000. So which will equally give you 75,000. So this disposal, there is no gain, there's no loss. So it means that the pool two will be dissolved. The pool two will be dissolved. Good. Let's go to the next one. Trademark was paid for. So we have pool five for 10 years. Then the goodwill, 100,000. The company decided to amortize the goodwill over 20 years. We don't grant capital allowance on goodwill. So we will not consider the goodwill. We don't grant capital allowance on goodwill. So we will not consider the goodwill. All right. So it means that we have pool 5. That'll be 15,000 addition, disposal for pool 2. Then we calculate our capital allowance. So addition, pool 1, no, pool 2, no, pool 3, no, pool 4, we have 15,000. Then disposal, pool 1, no, pool 2 was disposed of 52. So it's 75,000. The pool will be dissolved. So 75,000. Then no, the pool will be dissolved. Good. So our depreciation base 809 is to be dissolved 51,879, 6,12356 and 15,000. Good. So this is our base for depreciation base. So we calculate our capital allowance A by B by C all over 365 days. So what the capital allowance for pool 1? This is 324. Pool 2 dash pool 3.2 by 51,879. This is 10,376. Then pool 4 will be 70,000. Then this will be 1,500. Because the pool 5 will be the cost over the useful life. So that will be 15 years over 10. One Shadi, your hand is up.
Sir,
Yes.
sir, please, the capital allowance for class 1,
Yes.
the 324, is not less than 500. So it's written up.
Come again.
The 324 and that class 1, the capital allowance
Yes.
is less than 500.
It's less than 500.
So, but the law says that it's less than 500. We disallow it as 0.
Yeah, it's not the capital allowance. So I know this one will grant the amount as additional capital allowance. The law is that when the written down value after deducting the capital allowance, the written down value is less than 500 cedis. Then you give that amount as additional capital allowance. One side, are you following me? It's not if the capital allowance is less than 500 cedis. It's when after deducting the capital allowance, the written down value is less than 500 cedis. Then we give that amount as additional capital allowance. So let's get the written down value and see how much it will be. So you will get there. You get there. So let's do that. That's where we are now. So the written down value from here, it will be how much? So when you take minus 324, it's 485. Is that not it?
Yes.
The 485 is less than 500 cedis. So we will grant the 485 as additional capital allowance. So it means that the capital allowance for pool 1, it will be what? The 809.
09.
It will be 809. So the written down value will be 0. So we will dissolve the pool. Is that okay?
Yes, I get it.
Yeah. So it's when the written down value is less than 500 cedis. Then you grant that amount as additional capital allowance. Then we dissolve the pool. All right. So this one, what we do, the written down value is 485. The 485 is less than 500 cedis. So we give it as additional capital allowance. So it means the total 809 will be given as additional capital allowance so that we dissolve the pool 1. Pool 2 is already dissolved. So the pool 3, what the written down value will be what? So this will be 41503. Pool 4, 612,356 minus 70,000. So this is 542,356. Then pool 5, it will be 15,000 minus 1,500. This is 13,500. Let's go to 2020 year of assessment. Class 1 is dissolved. So let's bring the written down value brought down. Class 1, we don't have anything. Class 2 is dissolved. Class 3 is 41,503. Class 4 is 452,356. Class 5 is 13,500. Now let's go to the question. Let's go to the question. In 2020, they bought home use vehicle. They bought home use vehicle for 70,000. You see, so this one, the value is maybe up to the 75,000. So we cannot limit it. So we leave it. They purchased office computers. So there we have class 1 again, 5,000. Then they purchased trucks and trailers, 50,000, class 2. So it makes class 2 so far we have 120,000. That'll be 70,000 plus the 50,000. Sold some office furniture for 3,000 Ghana cedis. So there was a disposal, 3,000 Ghana cedis for pool 3. All right. So let's do additions to the pool. So let's do additions to the pool. Pool 1 will be 5,000. Pool 2 will be 120,000. Pool 3, there was no addition. Pool 4, there was no addition. Pool 5, there was no addition. Then let's do the disposal. Pool 1, no disposal. Pool 2, no disposal. Pool 3, there was a disposal of 3,000. 4, no disposal. 5, no disposal. Then we get our depreciation base and we compute our capital allowance. So depreciation base. This will give you the 5,000. This will give you the 120,000. So this will be our 542,356. This will be our 13,500. So that'll be the base for pool 3, 41,503. 41,503 minus 3,000. This will be 38,503. So let's calculate our capital allowance. A by B by C all over 365. So pool 1, that will be 40% by 5,000. How much will you get? This will give you 2,000.
2,000.
Pool 2, 30% by
36.
36,000. Pool 3, pool 3, 7,701. Is that it? Then pool
So pool 1 is what?
is 2,000.
5,000 by 40.
Yes, 2,000. Good. So you get the written down value at end. Then you are done. So we are done with the question. This question worth the 15 marks. Is it 15 or 12 marks? This question worth the mark. Yeah, 15 marks. Yes, it's a good question for 15 marks. Can we move on? Or I should go back to the whiteboard, the working sheet.
Yes. Please, the whiteboard.
All right. So
7701.
yes.
70,000.
All right. So let me use 1 minute and ease myself and come. I'm coming. All right, can we move on? Now, Philip, can I move on? Okay, I believe I can move on. Now, let's go to the next question. The next question is on financial cost and financial gain. So let's do justice to that. Abanua runs a manufacturing business with a basis period from January to 31 December each year. The following information is relevant to its business for 2022 year of assessment. Can somebody hear me? Yes, I believe I can be heard. Now we have the gross profit, financial gain of 70,000 was added. There we have these items were deducted. Depreciation was deducted, dividend payments was deducted, bribe was deducted. Financial cost incurred was 200,000 was also deducted. So we have the net profit of 80,000. Additional information. The finance cost incurred inclusive of interest on loan, 20,000. The capital allowance was 15,000. One, state the provision underlying the deductibility of financial cost. So we spoke about the provision already. So the provision is that the financial cost will be deducted to the extent of the financial gain plus the 50% of adjusted taxable income, calculated without including the financial cost and the financial gain. The excess amount due to the limitation of the rule will be carried forward for the next 5 years. Tell the examiner that you get your 2 marks. Now, the second requirement, you have to compute the allowable financial cost. For 7 marks, you have to compute the allowable financial cost. Then the last requirement, you have to compute the tax payable. So let's solve this question fast. Now, the total financial cost is 200,000. They have already deducted it too. So it means we have to adjust the chargeable income. So we have to reverse it. The total financial gain is 70,000. So it means that the limitation of the financial cost that can be deducted, it will be the 70,000 plus 50% of the adjusted chargeable income. So let's adjust the chargeable income. So this is question 14, okay? So question 14. Abanue Limited, all right? So computation, you have to take the basis period and year of assessment too. That will also carry mark. Computation of allowable financial cost. You have to always make sure you write the basis period and you write the year of assessment. Always, every calculation you want to do, you have to write the heading. Now let's adjust the chargeable. Let's adjust the chargeable income. After adjusting the chargeable income, then we will find 50% of it, add it to the 70,000. That will give us the extent to which we can deduct the financial cost. Now, our net profit as per the account is how much? I think it's 80,000. Is it 80,000? The net profit 80,000. Mr. Philip.
Yes, sir.
Is the net profit 80,000? Sister Juanita, is the net profit 80,000? Now, I believe so. Let's do the add backs.
Net profit
Yes,
for question
14.
number 14.
Yes.
Yes. No, gross profit. Okay, net profit is 315.
No, that's not the net profit. After taking all the deductions out,
Okay, 80,000.
it's 80,000, yes.
Oh.
It's 80,000. So the net profit is 80,000. Now these items were deducted. So let's see. Depreciation is supposed not to be deducted. So we add depreciation back. Dividend payment will not be deducted. We add it back. Bribe will not
Disallow.
be. Bribe, we disallow bribe. Then we disallow the
Disallow.
we disallow the financial
Disallow.
cost too. All right. So
Disallow as a charge.
yes, and you have to refund. So how much is depreciation? Juanita, Sister Juanita, how much is depreciation?
Depreciation.
How much?
20,000.
20,000. Dividend is 10,000. And
Yes.
what about
Bribe. Hey, who the bribe?
bribe is how much?
5,000.
And the financial cost is 200,000.
Yeah, 200,000
So
Gambian tour.
the total will be that will be 235,000. Add it. When you add it, 235 plus 80. That'll give you 315. That'll give you 315. Then we less capital allowance. How much is capital allowance? Capital allowance is how
Capital
much?
allowance of 15,000.
Yeah, is it the dome? The dome. Ask your question.
Yes, sir.
Yes, sir. I can hear you.
Yeah, please, can you go back to the question for me?
All right.
There's finance cost. Let me.
All right, I'll go.
$235,000.
Yes. See, I'm here.
Okay, additional information.
Yes.
So the financial cost
Yes,
incurred is
yes. Thank you
interest
very
of loan.
much. Thank you
Yes, sir.
very much. Yes. So we are
Inclusive of interest on loan.
on loan, so we have to take it out. Yes.
So we take the 20,000 from it.
Yes. So it means that the total, the
180.
actual financial cost is
180.
180. Yes. Thank you, senior. Thank you, senior. So it means that the actual financial cost is 180. So that would be 180,000 Ghana cedis. So we add the 180 to 35,000. So that'll be 180 plus 35. That'll give you 215. So our adjusted profit will be plus 80. That'll be 295.
Are you adding?
Yeah, it's add back. Yeah, adding. It's add back.
Then why are you putting it in brackets?
Hey. Why? I like to put everything in brackets.
Misleading. You
Okay.
misled the constituents.
Yes. How much is the financial gain? 70,000. Capital allowance is 15,000. Financial gain is 70,000. So 15 plus 70. That'll give you 85,000. We left this one so that we know our adjusted chargeable income. How much will it be? This will give you 210. So this is adjusted chargeable income. This is adjusted chargeable income. All right. So let's see the extent to which we can allow the financial costs. Okay. So allowable financial costs.
Is it continuation?
Yes, we are continuing.
Please, just flick back. Let me just pick something and you come.
All right.
Okay, we move on.
So allowable financial costs, let's compute that. Okay. Amount of financial cost is 180,000. Now, this will be restricted to financial gain of 70,000. Then 50% of chargeable income, of adjusted chargeable income. So that would be 50% of 210. And this will give you 105. Is that not it? So the extent to which we can allow is 175,000. So the excess amount is 5,000 Ghana cedis. So this is excess amount. So the excess amount will be carried. The excess amount, we tell the examiner that the excess amount of 5,000 Ghana cedis will be carried forward for the next 5 years and deducted from any financial gain that will be made. Now, we are asked to calculate, I think that's the third requirement. We are asked to calculate the tax payable. Is that not it? Mr. Philip, you want to ask a question?
Like I've gotten it.
All right. We are asked to compute the tax payable. The tax payable. That's what we are saying. The tax payable. All right. For 6 marks, let's calculate that. So Roman number 3 is computation of tax payable, right? So this one, we already have our adjusted chargeable income already. So just start with your adjusted chargeable income, which is 210,000. Now, this income, we did not consider the financial cost and the financial gain. We did not consider the financial cost and financial gain because the financial cost and financial gains was deducted before they arrive at the 80,000 profit. We have adjusted it. We have added back the financial cost and we have deducted the financial gain. Now we know the limit of the financial gain that can be deducted, which is what? 175,000. So let's move on. So adjusted taxable income 210. Then let's add the financial gain. The financial gain is 70,000. So this will give us 280,000. Now we now have to deduct the financial cost of 175,000 Ghana cedis. Then we know our chargeable, the actual chargeable income. That'll be how much? So 280 minus 175. That'll give you 105,000. So we tax it at 25%. That'll give you 26,250. This is our tax payable. Any question? Is there any doubt lingering in somebody's head? Yeah, one Shadi. Let's clear the doubt.
Sir, so
Yes.
please the excess, I want to get clarification for the excess allowable financial cost.
You want to get clarification for
The excess allowable financial cost.
the excess allowable financial cost.
Yes, it is.
No, the excess is not allowable. No. The excess will be carried forward for the next 5 years.
The excess of 5,000. How do you calculate it?
Yes, so that is the limit. The limit, okay, let me go back You see, the rule, the provision is that the financial cost will be allowed to the extent of the financial gain plus 50% of the adjusted chargeable income. Now, you have to calculate the adjusted chargeable income without including the financial cost and the financial gain. Now, in the question, the net profit given to us, 80,000. The financial cost was deducted, so we have to add it back. We were told that the financial cost was inclusive of interest
of 20,000.
Interest on loan, 20,000. Now, interest on loan is deductible for tax purpose. So that one, they have deducted it. That one is fine. So it means that the actual financial cost is 180,000, which we cannot allow them to deduct all. So first, we have to reverse it first. So when you do that, you get your, and the financial cost was added. The financial gain of 70,000 was added, which you have to deduct it. Capital allowance is an allowable deduction. So if you do that, your adjusted chargeable income will be 210,000 Ghana cedis. Now, for us to know the extent to which we can deduct the financial cost is 180,000. It will be restricted to the financial gain, which is 70,000, plus 50% of the adjusted chargeable income. So 50% of 210 will give you 105. So 105 plus 70, that will give you 175. So it means that out of the total financial cost of 180,000, we can deduct only 175,000. The excess is the 5,000.
Why is it restricted to 70,000?
Why is it what?
It's restricted to financial gain of 70,000.
Come again, Senior. Let me hear you well.
Why is it restricted to financial gain of 70,000?
It's not only the financial gain, it's the financial gain plus the 50% of the adjusted chargeable income. You see, this is what the question gives us. The question gave us that the financial gain is 70,000. It depending on what is given to you in the question. The financial gain can be different amount. So the amount that is given to you in the question, that's the amount you use. I don't know if you want, I'm answering your question.
Yes, please, you're answering it.
Yes.
But my problem was when we are calculating the excess amount for the allowable financial cost.
Yes.
Is the actual amount, which is the 180,000.
Yes.
Minus the 50% of the allowable financial cost.
No.
The adjusted chargeable income.
Yes.
But
plus the 70%. It's not only the 50% of adjusted chargeable income. It's plus the financial gain, which is the 70,000.
Okay.
Are you okay?
Yes.
So know the provision. It's not only the 50% of the adjusted chargeable income. No. You add the financial gain to it. So when you add the 70,000 to 105,000, that'll give you 175,000.
Is that the financial cost?
Come again.
Is that constitute financial cost?
Yeah, that is the limit to which you can deduct the financial cost. When you add the financial gain of 70,000 to the 50% of the, to 105, you get 175. So it means that the financial cost, we can only deduct 175. The excess.
Okay, the actual financial cost was 180 after taking the interest.
Yes, was 180, yes. The actual financial cost was 180, yes. So it means we can only, out of the 180, we can deduct only 175. The excess 5,000 will be carried forward for the next 5 years. Senior one Shadi, I believe you are fine.
Yes.
All right, okay. This is a normal course of business. This one is principles of taxation. We are not doing natural resource taxation. So I don't want to say anything about that. When you come under advanced taxation, natural resource taxation 2, the rule on deduction of financial cost and financial gain is different. That place is just that the financial cost should be equal to the financial gain. That's all. So financial cost is deducted to the extent of the financial gain. We don't do adjusted taxable income, find 50% of it and add. No. For natural resource taxation, mining and minerals operation and petroleum operations, is that the financial cost should be equal to the financial gain. That's all. But we are not yet there yet. This is principles of taxation. So this is what you have to know. When we come at level 3 advanced taxation, we talk about that one.
Senior.
Yes.
The restricted amount, the
175,000.
105.
Yes.
We are deducting it from the financial cost, the total.
Yes, to know the excess amount. Yes.
So it should be in bracket, right?
Yes, it should be in bracket. But even if you don't put it in bracket, the examiner know what you're calculating. So it should be in bracket, yes. So by yourself have to know that the limit is the gain plus the 50% of the adjusted
50% of adjusted taxable
income. So yes. So one Shadi, I believe you are okay with how we compute the taxpayer rule.
Yes, for the first year, I'm okay.
Okay, all right. Thank you very much. So let's go to the next question. So let's go to this question is on repairs and improvements. That's question 15. The 16 is okay. All right. I don't have the 16 is your limit, your more question. But kindly solve all your questions you guys have, the questions you guys have in the pilot questions. Try and go through them. There's some questions they brought there on repairs and improvements. That the question they give, the question is a manufacturing company and they give plant and machinery. In their solution, they put the plant and machinery and I put 3, which is wrong. So that one, I think we solved that question during class. You just add the things together, you are good to go. Let's solve the question 15 on repairs and improvements. Yes. So I've done a question on capital allowance. Let's solve a question on financial cost and financial gain. Now, I want to solve a question on repairs and improvement. Then we take one general question. Then we are done with business income tax. Then we move to the following topic. Repairs and improvements. So APK Limited commenced business on September 1, 2022. So take note of date of commencement of business. Preparing account to 31 December each year. The following transactions took place in respect of 2022 and 2023 years of assessment. So for 2022, they acquired some assets. Motor vehicle was acquired. This is motor vehicle. I told you if the question gives only motor vehicle, limit the value to 75,000. They gave us 80,000, which will be restricted to 75,000 for capital allowance purpose. Delivery vans, 100,000. This one I cannot limit. It's a delivery vans. You don't know the number, so you cannot limit. This was also acquired on September 1, 2022. The motor vehicle was acquired on February 1, 2022. They have it before they start operation. So we only give the capital allowance from the time the business starts to commence, the business starts to operate. In July 1, 2023, they sold the motor vehicle for 60,000. All right. Motor van, 70,000 was acquired on September 1, 2023. Motor van engine, 40,000 was done. Repair improvement was done on November 1, 2023. You have to compute the capital allowance for 2023 year of assessment. You have to compute the capital allowance for 2023 year of assessment. After that, you determine the amount of the engine cost that can be capitalized and the amount that can be expensed in respect of 2023 year of assessment. So let's solve this question. If you have any doubts, any question you want to ask, you can ask. If you have any question you want to ask, you can ask. So question number 15, APK Limited. APK Limited. So The basis period will be we have 2 years. So basis period for 2022 will be September 1, 2022 to 31 December 2022. The basis period for 2023 year will be January 1, 2023 to 31 December 2023. All right, so we have to compute the first requirement. We have to compute computation of capital allowance. We have to compute capital allowance. Now, everything in that question belongs to pool
2.
2022 year of assessments. Everything in that question belongs to pool 2, where the capital allowance is 30% on reducing balance. So the cost will be 175,000 Ghana cedis. Is that what it? Because the motor vehicle will be restricted to 75,000. The delivery van, 100,000 will be added. So that is it. Now, capital allowance will be computed for that year. That will be A by B by C, all divided by 365 days. Now, how much is the A? A is the 175,000 by the rate 0.3 by how many days would they have? From September 1 to 31 December. How many days would that be? How many days would be that? So September have 30, is that it? October have 31. November have 30. December have 31. So this is 60 plus 61, 62. That'll give you what? 120 what? 122 days. So by 122 days. All right. So how much will be the capital allowance? How much will be the capital allowance? So this I'm getting 17,543 to the nearest whole number. So our written down value at end, our written down value carried down, I'm getting 157,452. It's a written down value as at 2022. Good. So we say we have to compute capital allowance. So capital allowance for 2022 is 17,543. All right. Now let's go to 2023 year of assessment. Our written down value brought forward will be 157,452. Now, any addition to the pool? Do you have any addition to the pool 2 assets? Do you have any addition? Okay, motor van was acquired, 70,000. And there was a disposal, 60,000. Okay. Motor van was acquired, so 70,000. There was a disposal, 60,000, which will be taken off. Now, let's do some workings here. There was repairs and improvements, 40,000. The vehicle engine was replaced. I think the delivery van motor, engine was replaced for 40,000. So let's do some workings and see the amount. So that has to be second requirement. So let me do it here. So the second requirement, we have to compute amount to expensed and amount to what? To capitalize. So computation of amount to expensed and amount to be capitalized. So repairs and improvement. Good. Now, the rule is that the repairs and improvements should not exceed 5% of the written down value at the end of the pool. So you state the rule. The rule is that the repair and improvement, let the examiner know the rule that you are using, should not exceed 5% of the written down value of the pool at the end of the basis period. All right, so let's find the written down value at the end of the pool. All right, so this is class 2, 30%. So we have our written down value brought down, which is 157,452. There was addition to the pool, 70,000. There was disposal from the pool, 60,000. Good. So our depreciation base will be, how much will it be? So this is 167,452. We give our capital allowance. Capital allowance will be computed. So this will be 30%. This is 2023, so it's full year. So 30% of 167,452. I'm getting 50,236. So our written down value at end, our written down value carried down. I'm getting 117,216. This is the written down value at end. Now let's move on. We have gotten our written down value at end. Now the rule is 5% of the written down value at the pool. So amount of repairs and improvement is 40,000. It's 40,000. This amount, the restriction, the limit, we've stated it already. So that'll be 5% by 117,216. Then you will get 5861, 5,861. So it means that out of the 40,000, that was used to replace the engine of the motor of the delivery van, it's only 5,000. It's only 5,000.
860.
5,861.
Okay.
This is the only amount that can be, that is the amount that can be expensed. So this is amount to expensed.
Amount expendable.
So amount to capitalized. Amount to capitalized. It will be how much? That will be 34,139. 34,139. We are done.
34,139.
Yes, that is the amount that should be capitalized.
Please flip back, let me see.
So let me go back. So we add excess. Excess. What is withholding tax?
Down value. No, it's written that value I'm calling right now. Sorry.
All right. So we add excess amount of repairs and improvement. Which is 34,139. When you do that, our depreciation base will be, when you do all the additions and subtraction, it will be 201,591. Then we calculate our capital allowance. So you multiply this by the 30%, you'll be getting 60,477. So our written down value at end, our written down value carried down, you get 141,114. So capital allowance for 2023 is 60,477. We are done. Any question? Are you guys tired?
Yes.
Oh, we've not done 3 hours yet too. Today we are doing 4 hours. Sister Juanita, are you tired? I for guys there, I will not.
I'm here.
Are you tired?
No, please.
Yeah, as you can hear from the voice.
Yeah, the guys there
I'm
will
not
not have.
tired.
Yes, she's not. The guys there will not have mercy on you. The lady is not
I'm
tired.
not
So
seeing anything. No. Is it the depreciation base 201?
yeah, it's depreciation base 201.
That's the total, right?
Yeah, why you add and do the subtraction? You take the disposal out.
2015.
59191.
And you take your capital allowance.
Yeah, 30%. Let's move on to the next question.
Please, small. Hey. Please just get back for me to finish it then.
I should go back again. Okay, I'm there. You see the question small like that. You do calculation tire.
You see, no, they have mercy.
All right, so let's move on. Let's solve Yahoo Limited, the last question on business income tax. I think that's the last question I have. There's a question here. Yes, let me see. The B part. In charge manufacturing limited incurred research and development cost of 350,000 Ghana cedis during the 2023 year of assessment. The research and development cost consists of acquisition of new machinery, 200,000, training cost of staff, 150, the total of 350,000 Ghana cedis. Now, the requirement, you briefly explain the tax implication of research and development. What are the tax implication of research and development? What are the tax implication of research and development?
To get additional tax liability.
You say what, senior? You said the research and development to do what? Hey, this one is simple.
Tax implication.
Yeah, on research and development. If you cannot answer this one there, then forget the passing the paper.
Why? This is not the only person.
This one is very simple.
The company will get tax liability.
Get tax liability on what? Hey, let me find out. let me find out from the lady. Sister Juanita, what's the tax implication of research and development?
Please, you call me.
Yes.
Repairs and the rule repairs and maintenance should not exceed. I don't know the physics period. So the implication is that
It's a research. Come again. It's a research. Philip, you say what?
I said the rule said it should not exceed 5% of the written down value of the asset of the pool at the end of the business period.
That's
So
that's repairs and improvement.
Now which one you asking? Repairs and
I said
maintenance.
research and development.
Oh, okay.
Yes. I said research and development. What's the tax implication?
Sir, can I come in?
Yes. Hey, it's not Derek.
Yes.
You have landed. You are welcome.
Yeah. I want to contribute. Maybe it might be wrong, but I want to share my idea.
Maybe this is different, Derek. This is not the one I know.
No, this one is different. I joined today.
Yeah, the voice, this voice, I never heard it before. All right, come in, senior.
Okay, so I think the law says that because research and development, like staff training and all, can be used, or the business can benefit from it for more than a year, I think the law says it should be capitalized as like an asset. I don't know whether I'm right.
All right,
I think that's on accounting base.
Yes, thank you. That's accounting treatment. That's accounting standard. IAS 30, is it 38 intangible asset?
But I think tax gives on the spot charges.
Tax did what?
On the spot.
On the spot. I don't understand.
That's as and when it's incurred, it's expense. So the grant is it capital allowance at the time it is expensed?
I said earlier that if you cannot answer this one there, then you can get 45 and you will not pass. This one is very simple. See, Derek, what you've said, that's accounting treatment. According to IAS 38, intangible asset.
Okay. So if that is the okay. So if that's that accounting treatment, I think that you see, once the asset is not expensed and it's rather capitalized, I think it will reduce the tax liability a little. So I don't know. I feel it has a tax implication.
Yes, it has a tax implication. But what is the tax implication? That's what the question is asking.
The implication is that the company will have additional tax to pay, because when in accounting side they capitalize it, it means the tax is spread.
Yes.
But when it comes to tax, they give, that's what I was telling on the spot. They give it as soon as it's expensed.
They give what? They give it as what?
Yeah, I think they are allowable for tax purposes.
Thank you. It's allowable deduction for tax purpose. Okay. That's the implication. Research and development, you see, in accounting, like what our senior said, they will capitalize. If it's they will expense the research component. The research component will be expensed. Then they will capitalize the development, saying that it will last for more than one accounting period, so they will capitalize it. But the IAS 38 equally says that you cannot capitalize internally generated intangible assets like training costs and those ones. But for tax purpose, we don't care whether you capitalize or you don't capitalize. So research and development, that meets the deductibility criteria. So you tell the examiner that the research and development, that meets the deductibility criteria. So when that is wholly, exclusively, and necessarily incurred, will be allowable deduction for tax purpose, unless the research and development does not meet the deductibility criteria. Then why we disallow it. But the ones that meet the deductibility criteria will be allowable deduction for tax purpose. Simple like that. It will be allowable deduction for tax purpose.
So
That's
is
what
that the tax implication?
That's the tax implication, yes.
It's an allowable deduction
It's allowable deduction if it meets the
criteria.
the criteria. That's all. That's the tax implication. That's the reason I'm saying that if you cannot answer this one, then the 5 marks will go to over you.
No, but we have the idea about how to, if for lack of terminology, that's why.
So this one, take note of that. This simple one, they will make you to get the 50. You don't even need +1, 50, you are gone. If you want to get award there.
Listen, get back to the whiteboard for me. I've not finished the last portion.
Oh, you can do that one on yourself, senior. That just clear that one on yourself. This
So
one.
me, amount of
Hey, Charlie, our time is going. You have less than 1 hour more, Charlie. If I want to end 11, but I push it to 12. But on the timetable, it's not 8 to 11. So we'll go to 12. It means we have to find another day so that we can conclude. We have to find another day so that we can conclude. I'm solving more questions, so it will help. At least 3 days will be enough. All right. So that's the research and development. Now let's do question 16. Yao limited. This is your more question. Very good question for exam. But this question is too loaded for principles of taxation. That's what I'm thinking. For principles of taxation, this question is good for advanced taxation, but it's too loaded for principles of taxation. But we will still do it. You don't know what the examiner can do. I'll be saying this. Any two courses that are interrelated, advanced taxation and principles of taxation, the topics, we have similar topics. Like what we are doing, corporate income tax is there. Income tax liability for individuals and partners is there. VAT is there. They can just swap the questions. Questions that is meant for advanced taxation, they can bring it for principles of taxation because it's there, the same principles we are using. So we'll still have to go to this question. Now, this company is a manufacturing company. So every statement in a tax question, every statement in a tax question is very, very relevant. You have to take note of it. Every question, first of all, read the requirements of the question first. The requirement will tell you how to approach the question. The requirement will tell you how to approach the question. So this question, you have to compute the tax payable by Yao Limited, tax payable for 2022 year of assessment. So we are going to be doing tax computation. Now, the preamble says that the company is a manufacturing company and is operating in, what word is this? Sepase township of Nwambieja district in Ashanti region of Ghana since 2012. So it means they are in operation for 2012. Since 2012. And we are doing the assessment for 2022 year of assessment. The first statement here, what does it tell you? What implication would the first statement have on the computation of tax? The first sentence, what implication will it have on your tax computation?
To conduct research and development.
Where is research and development? Where are you seeing that from?
Is it not under your limited question 16?
I'm not talking about the first additional information. No. I'm talking about the preamble. The preamble.
Okay.
Yeah. What implication would this preamble have on the tax computation of Yao Limited?
The operation pool 2, is it pool 2 or plus 2? Manufacturing company that has been operating.
Yeah.
Yes.
Please, I think they will enjoy tax concern.
Incentive.
Yeah.
Boss, yes, one Shadi, come again, please.
Yes, I think they will be enjoying tax concession, tax relief.
At what? At what rate?
Tax concession.
They will enjoy 75% of the, so 18.75.
Okay, it's not called concession, it's rebate.
That's rebate.
Yes.
I said concessionary benefit.
No, that's not concessionary benefit. Concessionary benefit is during the period, your starting period. This one is rebate. It starts rebate. So it's the locational
Based on
incentive.
location base.
Yes. This one, they will enjoy the locational incentive. They are located, so you have to know the rate. That's the reason I'm telling you that. Every statement in a tax question is very, very important. This one, they are manufacturing company. So your mind should go back to the rate of manufacturing company. The locational incentive, if they are located at Tema and Accra, what are the rates? They pay the 25%. So they don't enjoy any rebate. So the statutory rate is 25%. So you are a manufacturing company located in Accra or Tema, 25%. If you are located at other regional capitals, other regional capitals, you do what? You pay tax at the rate of 18.75%. Other regional capitals, so Ashanti region, the regional capital itself, Volta region, Ho, the regional capital, you are located in Takoradi, which is the regional capital, Western region. You are located in Sunyani, the regional capital itself. You pay tax at the rate of 18.75. So it means that you are enjoying a rebate of 25%, and you are paying only 75% of the 25%. Then if you are located in any other district apart from the regional capitals, any other district apart from the regional capitals, what the rate? You pay 12.5%. 12.5. It means you enjoy a rebate. You enjoy a rebate of 50%. Now, Yao Limited, what rate would they pay tax? Even that one said, I have a summary in your notes. I mean, you can see the summary. I've done summary, the concessionary rates and everything. I've done summary in your notes for you. Yao Limited. What rate would they pay tax?
Then other region.
So, what the rate?
30 point.
18 what?
18.57%.
That's wrong. That's wrong. Over the bar. That's wrong. It's not 18.75. They will pay tax at 12.5%.
Is it because of the districts?
Yes, they are not located in the regional capital. They are not located in Kumasi. Where are they located?
Mwabieja district.
Yes, that is not Kumasi. No. Kumasi is the regional capital of Ashanti region. They are not in Kumasi. They are in Sepase, which is in Nwabieja district. That's not Kumasi.
Sepase.
So they'll pay tax at the rate of what? 12.5%. So the location will indicate the tax rate and the type of company. Now let's do a quick recap before we move forward. So we are just talking about manufacturing company. So we've gone through the rate, the locational incentives. Now, what about if it is not a manufacturing company, but it is agro-processing? Agro-processing, it could be farm, it could be agricultural business, it could be farming, it could be any type of business, agro-processing, farming business. It could be cattle farm, a livestock farm, and the rest. What would be their rate? So in Tema,
10%. 10%.
Okay, this will be 10%. Yes, 10%. But in Tema and Accra, the rate will be what?
20.
20. All right. In other regional capitals, the rate will be 15. Is that right? The other regional capitals apart from the Northern Savannah Ecological Zone, that's the 15. Any other place apart from the 3 northern regions is 10%. The northern regions is 5%. Is that not it?
Yeah.
Okay. Thank you very much. So we'll take note of the rate, the rate, right?
That's for agro business.
Agro business, farming
But
business,
this manufacturing.
yes, farming business and the rest. That's for them.
Sir, I have a question.
All right, boss. Shoot, let's go.
Yeah, I wanted to ask. So, you said this is an agro business. If it's agro business, these are the rate.
Yes.
So, which one was the law saying that for the first 10 years they are allowed not to pay tax on
for the first
their business? So after the first 10, yes, please.
Yeah, that is. You see, that one is in advanced taxation. It's not in principles. That is companies located in the free zone.
Free zones. Okay.
The free zones companies. Free zones companies, they don't pay tax for 10 years. 10 years, they pay nothing. They don't pay anything. And the free zones too, there are a lot of incentive they enjoy. I don't want to bother you because this is principles of tax. If it comes to advanced taxation, we'll talk about all those things.
Okay, sorry. Yes. I didn't know. I think I read it somewhere. That's why I was
that is
confused.
it.
Thank you, sir.
That one is not in principle. It's in advanced taxation. It's for tax planning measures. So when you come under advanced taxation, we'll talk about that. But free zones, they don't pay tax for 10 years. Free zone company. All right. So let's solve the question. So we have the net profit. The figure is very big. It means that this company is making a lot of profit. They will pay good tax. They've conducted research and development, 3.3 million. Will it be allowable deduction? The research and development, will it be allowable deduction?
You just said it.
Okay, thank you. So this one is allowed. It is included in the cost of operation. So that is a good thing the accountant has done. So this one we allow it. Now, depreciation will be added back. We don't allow depreciation, so we add depreciation back. Then the company has been investing in rural and community banks as a means of hedging to secure payment of its loans. In the first quarter, they received interest income of 21 million. The last quarter, they received a dividend of 12 million. These transactions were included in arriving at the net profit in 2022. So you see, in determining the accessible income, we know how you do it. You determine from business separately, you determine from employment separately, and you determine from investment separately. You cannot add the figures together. The tax authorities want to know the business activity. This is the chargeable income you have. This is the accessible income you have. From employment, this is it. And from your investment to this is it. You must specify all of them. Now, this person, the interest they earned on their investment in the rural bank, 21 million, they have added it to their business income, which is wrong, So we'll go and subtract it. Then, after we are done determining the accessible income from business, then we bring it separately. Income from investment, different line. They added dividend, 12 million. Dividend is final withholding tax, 8%. So dividend supposed not to be added. Final withholding tax supposed not to be added to what? To their income. They have done that. So we take the dividend out. Refreshment and entertainment, 1.44 million. Was in respect of the MD's birthday party. The man that celebrate birthday go in care 1.44 million. They came and deducted it. This is not in line, so we add it back. We disallow it. The cost incurred on production platform and structures of permanent nature to improve access to the production ground, including machinery board amounting to 26,400,000. This was added to the operation cost. This is in place. You see, somebody will argue that structures of permanent nature, or let me just say, this amount should be disallowed. We capitalize it and we give them capital allowance. Somebody will argue that. That argument is fine, but any cost that is incurred, to take note, any cost that is incurred to improve the working conditions of the organization. This cost is incurred to improve access to the production ground. They equally bought machinery. How will you segregate the machinery from the structures of permanent nature? How will you do that? Because you know that the machinery it should be what? This is manufacturing. The machinery will be class 2. Structures of permanent nature will be class 4. How will you segregate the cost, the 26,400,000 to grant the capital allowance? And the cost was incurred to improve access to production. So any question that they tell you that the cost is incurred to improve access for production, and it involves different depreciable assets that you cannot segregate them, you allow it. You allow that cost. You allow that cost. So the 26,400 is an allowable deduction. They have done that, and that is in place. Cost of manufacturing plant, 600,000 is included in the cost of operation. We disallow this one. This is for only manufacturing plant, but this one was deducted, so we disallow it. And we capitalize this one and give them capital allowance.
Capital allowance.
Yes. Patent right of 150,626,500 was incurred without recourse to a successful production of the prototype developed from the research and development. You see, this cost will be disallowed. They have incurred this amount of money. They've conducted research and development already. That is 3.3. And we say we allow them to deduct it. They have done that. That is fine. But the cost that they have incurred on development of the patent right, even the outcome fail. This cost fail. So we disallow it. We cannot allow them to deduct this cost. So this cost will be disallowed.
Is it because of the failure?
It's because of the failure, exactly.
So if you have been successful?
No, if you have been successful, we will still disallow, but we will have given the capital allowance.
Okay.
We will have capitalized it and give the capital allowance. This will be class 5. And it's cost divided by the useful life. So far as the outcome was unsuccessful, they did what? We cannot capitalize it because we don't know the useful life. We don't know the useful life. So we will disallow it. We cannot even give you capital allowance because the product the development was not successful. So we do what? We disallow this cost. And we will not even give them any capital allowance because we don't know the useful life. 10 fresh graduates were recruited in 2022 year of assessment. They were paid 1.8 million in salaries. Total workforce was 60. So you know the additional incentive that is attached to employment of fresh graduates. So when you employ fresh graduates, you enjoy additional deduction. Now, the fresh graduates must graduated from a recognized tertiary educational institution in Ghana. So if the first graduates are graduated from tertiary institutions elsewhere, not in Ghana, you cannot enjoy the additional deduction on it. So this one, the 10 have graduated from what? We are not told where the school they graduated from. So the assumption is that they have all graduated from a recognized educational institution in Ghana. You add that note to your workings. Now, let's see, how will you compute the additional deduction? So if the first graduate is between
over the 60,
the percentage, all right, so if the percentage is between 0 to 1%, you give them 10% of the salaries and wages paid as additional deduction. 1 to 5, the percentage is what? 30%. And 5, above 5%, we give them 50% of the wages and salaries paid as additional deduction. Now, in this question, they employ 10, and the total workforce is 60. So that will be 10 over 60 multiplied by 100. This will give you what? 16.5% or 16.75. What will be the percentage? So 16.67. So 16.67%. This is above 5%. So it means that 50% of this, so that'll be 900,000 will be given to them as additional deduction.
Please go over this. Let me hear.
I should go over it again.
Yeah.
Right. So I'm saying that how they got
1 over 60 times what?
It's 10. It's 10 over 60 by 100.
By the amount.
But no, we are finding the percentage. We want to know the percentage of the first graduate.
Oh, okay.
If the percentage is between 0 and 1%, that means we give them 10% of the wages and salaries as additional deduction. If the percentage is between 1 and 5, we will give them 30%. And if the percentage is above 5%, we give them 16%. In this question, they employ 10 first graduates. So it will be 10 over the total workforce, over 60, by 100 times 100. This will give you 16.67.
Yeah.
Or let's say 17%. So the percentage, which is about 5. So it means that the wages and salary is half of this. That is 900,000. So the 900,000 will be given as additional deduction.
Oh, okay.
Are you okay?
Yes, sir.
All right. So,
sir, please, can I wanted to be clear on something.
All
so
right,
you are saying that if it's from 0 to 1, it means 10% of the salary will be allowed.
Yeah, no, not to be allowed. No, you see, the employment of fresh graduates, the law give an incentive to motivate the companies to employ more fresh graduates. Senior, can you hear me, Senior Derek?
Yes, I'm listening.
Senior Derek, can you hear me, please?
Yes, please, I'm listening to you. I'm listening.
All right. So the law give incentive to companies so that they can employ more fresh graduates that have graduated freshly from Ghanaian tertiary institutions. So now the principle is that if you employ the fresh graduate and the fresh graduate that you have employed, but first of all, I said earlier that the fresh graduate must have graduated from a recognized tertiary educational institution in Ghana. So if the person graduated from a tertiary institution elsewhere, not Ghana, we will not give you the incentive for that. Now, the incentive is that if the first graduates, they form 0 to 1% of your total workforce, we will give you the amount of wages and salary you pay to them. But first of all, the wages and salary is an allowable deduction. So you deduct that one first. That one will already be deducted before you present the statement for what? For verification, for examination. Then the amount you pay, the amount you pay to them, if the first graduate constitutes 0 to 1%, we will give you 10% of that amount as additional incentive, as additional deduction.
Okay.
Yeah. So if they form 1% to 5% of your total workforce, we will give you 30% as additional incentive. 30% of the wages and salary you pay to them as additional incentive, as additional deduction. Now, if they are above 5%, if they are above 5% of your total workforce, we'll give you half, 50% of the amount you pay to them as additional deduction. That's the law. Right. That's the principle. So in this question, they employ 10 fresh graduates. So their total workforce is 60. So you have to compute the percentage of the fresh graduate.
Yes.
So I get it. So I can move forward.
Yes.
Yeah. So if we compute, the percentage is 70% approximately. So it means that it's about 5%.
5%, yes.
The amount they pay to them is 1,800,000. So half of that, 50% of that will be 900,000, will be given to the company as additional deduction before they pay tax.
Deduction.
Yeah,
All right.
this one is to lower your tax liability.
Yeah, like a relief or something.
Yeah, like a relief, like an incentive given to them.
Yes.
Yes. Yes.
Good. Yes.
Okay.
Yes. Thank you so much.
You are welcome. So let's solve this question fast. This is the last question we are solving on company income tax. Then, if you have time, we go to capital gain, taxation of capital gain. We solved some few questions on that. When we are done, let me check the note. When we are done with that one, I think it will be left with how many topics? I'm coming. Let me see how many topics will be left.
Withholding tax planning.
So capital gain is here. When we are done with this one,
I think
we do
tax planning
withholding.
is the last.
We will do withholding. Then when we are done with withholding, then we will do what about VAT? We have done VAT already.
Yeah, we did VAT.
We did VAT already. Oh, okay. Oh, that's good. So after capital gain, it's left with withholding and tax planning. That's all. Oh, I see. So we can just use some.
Yeah, and said that.
Yeah, boss, I can hear you, senior.
I was about saying that the previous interventions or classes you held,
Yeah.
we have not been able to get access to it. It's not in the
Yeah.
it's not on your channel, YouTube channel.
Yes, I'll tell my boss man to put it on the YouTube channel. Maybe he has
All right,
forgotten.
we please beg you to do that for us.
Yes, my boss man have done that, so I'll ask him to do that. Yes, I'll ask him to do that. Yes, thank you
Sure.
very much.
Thank you so much.
Yes, we will do that. So let's solve this question. Let's clear this question within 20 minutes. We can done.
So why don't you take the 17 rather?
The 17.
It comes with a different dimension. Yeah.
Okay, no problem. We'll solve all. No problem. Let's do all.
Because of time, you've explained most of this one, most of the items here already. So we'll go and try that one ourselves. So let's take the 17.
Is that the decision for the whole class? This one, let me just add. It's just adding up the figures. So the name is Yao Limited. I have more interest in this question than the 17.
Oh, okay.
Yes. I have more interest in this question than 17. 17 there, it cannot count for you guys. It may be for advanced taxation. But I have more interest in this question than the 17.
Okay, if it's not our level, then let's just leave it.
Yes. No, it's at your level because it's within the syllabus. It's within the syllabus. It's at your level. We will solve all. Don't worry. We will solve all. We will meet again. One more meeting, then we are done. We don't have another class in the next 1 hour time, but I'll try. So the basis period, that is just 1st January 2022 to 31 December 2022. The year of assessment is 2022. So we are to computation of tax liability. Good. So we have the net profit as per the account. The net profit is 1. The figures are big. You go right tire. 1125. Is that it? 510. Okay. Then let's do the adjustments. Let's do the add backs. The things they have deducted that they're not supposed to deduct. Add back the following. So the first one is the depreciation, which was added, which is not in place. How much is the depreciation? 636,7 50,000. Refreshment was done for the managing director's birthday. You think we allow you to deduct it before you pay tax? We add it back. We have a manufacturing plant was acquired, where the cost was deducted, 600,000. We add it back. Patent rights, they incur it without recourse to the successful outcome of the prototype developed, which is 150, 626, 500,000. I think, is that all the add backs? I believe so. I believe that's all the add backs. Believe so. Okay, number one is in place. We add depreciation. Okay, these ones were included, so we will take them off. We deduct them. We add back. This one is allowed. 600 add back. This one add back. First graduate to be additional deduction. You calculate the capital allowance, which will also be deducted before we get the chargeable income and subject it to tax. All right. So the total add backs. But I'll finish right now. All right. The total add backs is 789. I'm getting 789. If the figure is not correct, kindly do the calculation and get the correct one. I'm adding anyway anyhow. So these are total add backs, but just know the approach. So when you add back, how much will you get? When you add back, you get, I'm getting, this figure is big. I'm getting 1,904,926,500. All right, we did that. We less, they've added interest. Interest, which is supposed not to be added. Interest of 21 million was added. We take it out. We bring it as a line item after we have gotten our chargeable income from business. The added dividend. Dividends will be subject to 8% final withholding tax. They added it, so we have to take it off. Dividend amount was 12 million. We take it out. Okay. Then the fresh graduate. The additional deduction for the fresh graduate, which is 900,000. We've done that already, so I will not do that working. Then we have to deduct capital allowance. They have depreciable assets. So let's go and do the workings for capital allowance. Let's do the workings for capital allowance. The workings, capital allowance. Good. We were given the written down value. We were told that the written down value was gotten after 3 years capital allowance was granted. Is that what the question said? The question says that the written down value of 600 million, written down value of the depreciable assets of the company brought forward from 2021 to 2023 after 3 years capital allowance was granted to that 600 million. This was certified by the audit unit of the GRE. So it means that the company have a depreciable plant. So it means that the written down value is relating to the depreciable plant, which will be class 2 asset. So it was 3 years capital allowance was granted. But for class 2 item, capital allowance is calculated on reducing balance basis, So it means this is the written down value. We do the addition. Then we calculate our capital allowance using 30%. Very simple. So this is class 2. So we have our written down value brought down, which is 600 million. They bought manufacturing plant within the year, 600,000. It will be added. So the depreciation base will be 6,600,000. So our capital allowance will be 30% on this. So 0.3 by 6,600,000. Would that be the value? No. It will be
The addition is how much?
it will be 600 million. The addition is 600,000. So it will be 600 million, 600 million, 600,000. Is that not it?
Yeah.
So it will be 0.3 by 600 million, 600,000. The capital allowance is 180 million, 180,000. So this is the capital allowance for the year. Go and deduct that. Go and deduct that capital allowance. So this will be 180 million, 180,000. So the total deduction will be how much? Plus 900,000 plus 12 million plus 21 million. So this is 214 million 80,000 Ghana cedis. This will be deducted. So when you take it out from the adjusted profit, 1,914,926 million, 1,914,926,500 Ghana cedis. So you get 1,700,846,500 Ghana cedis. So this is your chargeable income from business. Chargeable income from business. Good. Then we have to add the income from investment. So we add income from investment, which is I think which is 21 million. Which is 21 million. So when you add it, we have our total chargeable income. So we now tax at 12.50%. So the chargeable income will be 1,721,846,500 Ghana cedis. We tax it at 12.5%. So the tax is 215,230,813. So this is the tax payable. This is the tax. This is not the tax payable. This is not all. There's something we have to do again. There's something we have to do again. So this is the tax charged. This is the tax charged. Now, the interest received from the investment will be subject to 8% withholding tax on account. So we take that tax out. We have to take that tax out. So we less the tax credit, which is withholding tax on interest, which will give you 8% by the 21 million. How much would that give you? This will give you 1,680,000. So the net tax liability, when you do that, you get your net tax liability. When you deduct the withholding tax on the investment income, the 1,680,000 from the tax charge, you get your net tax liability. That is your final answer. Can I move on? Can we move on to the last question? The last question I'll just explain so that we close. We'll meet so that we decide on the day and meet and finish everything up. Mr. Philip, can I move forward? Can I go back?
Sir, this is what, let's tax what?
Tax credit. That's the withholding tax on the investment income.
That's withholding tax.
Yeah, the 8%
of
on the 21 million. So when you let it, then you get your net tax payable. Get your net tax, the net tax payable. That is all. Try your hands on question 17. It's not anything, you'll be able to do it. If you're not able to do it, what we meet, we solve it. It's very simple.
So does it mean we are taking the tax at 12.5 and then lessen the tax credit again?
Yes, that's it. The tax credit was on the investment income. You know, investment income, that's interest. That will be subject to 8% withholding tax on account.
I know how you are treating it. Is it taken from the tax or is taken from the
No,
total chargeable?
it's taken from the tax. It will be given as a tax credit
Also, we reduce it from the tax before
you pay the net.
Oh, okay.
Yes.
Leave that, then total chargeable income should be underlined.
It should be underlined.
Yeah.
Okay. Is that okay?
Yes, sir.
So why the tax credit to be in bracket too?
Yeah, that's what I did.
Yes. So if you do that, you know my space is finished. So do it
Yeah,
and get your net tax liability. Okay. So let's decide when are we meeting again to go through the last two topics: capital gain and withholding tax. There are 2 hours we can finish. But try your hands on this question. The question 17. If you're not able to do it, any challenge where we meet, you tell me, then we go through it. The question 17 is the pilot question for the advanced taxation student. The pilot question that ICAG brought. Yes, yeah. Yeah, Derek, I can hear you.
I was about to I said I was about to talk about the day we might meet again. So I was bringing a suggestion.
Okay, all right.
But
Okay.
Since you had something to say,
No. Let's decide on the day we will meet again. On Tuesday, they are meeting advanced people on Tuesday. So yeah.
So maybe Monday tomorrow, or
is it free for everybody tomorrow?
Tomorrow will be busy.
What do you have tomorrow?
Should we do it in the evening?
Yes, in the evening. It will be 6 to within 3 hours. We are done. That one there's not plenty.
Let's do it tomorrow evening.
Okay. So tomorrow 6 to maybe somewhere 9. Then we are done. That one there within 3 hours we
Okay,
can finish.
all right.
Yeah.
All right.
Yeah. So tomorrow 6 to 9. 6 to 9,
Okay,
yeah.
okay, then that's fine.
All right, okay. So I'm saying that the last
Okay.
question, the question 17 here is the pilot question for the advanced taxation people.
Question what? 17.
Yeah, it's a pilot question. The more question from ICAG.
Oh, okay.
This is a question for advanced people, not this not principle.
Okay.
But you try your hands on it. If we are not able to do what we meet tomorrow, I'll go through it. I'll go through how the treatment should be.
So look at it. Okay.
Yeah, we'll look at it, but go through it before tomorrow. So when we meet tomorrow, 6 p.m., we are doing taxation of capital gains. Then we meet, when we finish, we go to withholding. Withholding, that we do something small on tax planning. Tax planning is not in principles of taxation, but I'll talk about it briefly and see how certain things should be done, then that's all. So this one, within 3 hours, we can finish tomorrow. All right. So if no question, thank you for having me. We'll meet tomorrow from 6 p.m. to somewhere 9 p.m. Then we are done with principles of. Then I can discharge you to go and face ICAG. Then discharge you to go and justify your inclusion. Why you want to pass principles of. But I doubt if you're in this class that you are not able to pass principles of taxation. I doubt it. Because I don't know what they can bring. I don't know where they'll bring the question. I don't know what they can bring that you'll not be able to do.
Pray for us.
You
Pray for us
can see the pilot questions. They were just simple questions. The questions we are solving here are more difficult than that pilot questions. So the thing is the retentive memory. You should be able to remind them and do something. So solve more questions. Just go through all the questions we have solved again. You'll be fine. And know the principles. It's very, very important. So based on that note, we'll end the class here. Then tomorrow we will meet. I have another class too, so let me prepare for that class. All right.
Okay. Sir, please remember to
yes,
tell your guy to upload
I'll
the
tell my
first
guy
video.
I'll tell my guy to upload. It's on the Telegram page. I'll tell him to put it on the YouTube channel. All right, I'll do that.
Okay, thank you.
All right, thank you.
Thank you.
All right.
Please, can we also get a link to maybe the Telegram page so that if he delays, we can get access to it anyway.
Oh, no problem. He will not delay. You get it. You get it. You'll get it. Yes. He will send it.
Thank you so much.
All right.